All right. Good morning, everyone. Let me know if we have a 5x5. Can you all hear me? And as soon as I get that information, I know I'll be good to go. Brian, good morning. All right, guys. So obviously you see me here streaming publicly for the first time in quite some time. Obviously, my work has been majority on Discord. And, getting straight into the charts here, we pretty much just have a very classic weekly profile underway here. If you're not familiar with it, it's okay. Just follow along. And pretty much what we're looking at is Thursday declining, clearing out some type of low, which in this case, the consolidation low here. So offsetting those who have been buying, where's their stop loss going to get jammed at once they create this convincing low, right? Obviously, it doesn't take some type of, trading expert to grasp this type of concept. But as the market's continuously rising up, they create this convincing low here, right? And a lot of long-term investors and maybe swing traders, right, their stop losses are going to get jammed below these lows here. So Thursday comes into play, okay? And on a classic weekly profile standpoint, we see it decline, offset those who have been longing, take sell-side liquidity. So we're taking out willing sellers at a lower price, and that's the perfect counterparty to accumulate that and distribute it higher into new highs here today, Friday. So, yes, you heard it right. Coming into this session here, I'm absolutely bullish. And can that be subject to change? Yes, absolutely. When ego isn't a factor in, day trading here and whatnot, and then you're not going to have any problem with switching your bias, intrasession, intraday, whatever it is. But where it stands now, I'm bullish. Okay, I'm not going to sit here and say, oh, okay, well, if we do this, then I can see it going lower. But if we do this, I'm going to be bullish. Like, anyone can get on here and get on a live stream and say that, like, we're sitting here, we're predicting what is going to happen before the fact. Do we have to be absolutely correct about that every single time to make money? Absolutely not, okay? Coming in and looking at the 9:30 opening, basically another thing I'm seeing classically happen that repeats over and over again. We have the 9:30 opening dropping down. So if you think about it and look at price, what have we done? Here's our midnight opening. We open, and from that opening, do we see any lower pricing? We had this small retracement, but just touches midnight opening right there, and we continue higher. The grind higher continues, and then coming into the opening range, who has been making money? Well, obviously those who have been buying here. So what does 9:30 opening want to do? Slam down and take out those who have been buying. Just like I was explaining here, just on a smaller scale. Okay, stop losses are going to be jammed below here, and that's why you see it running below there to clear out that sell side liquidity. Okay. Now, if you take our range, okay, you always find midnight, and then you find the first significant low that was created following midnight. So in this case, obviously that's this low, so you take this low to the high. And very crystal clear, you can see that we traded down to a discount. Okay. Now, why am I not so hard-pressed to get on here and try to take a trade right away? What's the economic calendar looking like? We have a 10 a.m. news driver, so I know the opening range is likely not to yield me anything that I would be willing to take with my real money. So compare and contrast what I just said with whoever else you may watch, and like, okay, well, I'll take this on a demo trade. Well, listen, if you're in my Discord, you know that I feel strongly against that. Unless you don't know what your model is and you don't know what repeats in these markets, there's no reason to be trading demo, okay? If you know your model, you know it repeats, you see it day in and day out, you're either taking the trade or you're not. You're sitting on the sidelines, being disciplined, or you're taking the trade whenever you see your model, okay? So you kind of just have to play both sides of the spectrum to perfection in trading, and that's just what comes with it and what makes it, one of the most difficult things in the world to do consistently, right? And that is one side of the spectrum. You get the have some of the best patience in the world, right? You have to master that. And then on the other side, you have to be real on the ball and quick. And as soon as you see your model, you're getting in it no hesitation. Okay, so you have to be real snappy. But on the other end, in certain scenarios, you just have to be patient, sit on your hands, and do nothing. Okay, so you have to play both sides of the ball on that perfectly to really make this trading thing work, right? But anyway, following the run on sell side liquidity here so I can map it out. Okay. We obviously have displacement above that. Okay, we're short-term retracement here. Once again, I'm not buying that. There is nothing within my trading models that allows me to take a trade prior to 10 a.m. And, you know, if you back test it, however many days, weeks, months, whatever, are you going to find successful setups prior or at a 10 a.m. news driver? Yes, absolutely you will. But the statistics and historically, we understand that, you know, more times than not, your setup is going to fail if you're trying to take a trade at or before the 10 a.m. news driver. So what you really want to focus in on when trading these markets successfully is waiting for manipulation to manifest in the markets, and then you look to take a trade. Okay, so typically that's how I'd view this 9:30 opening. That's the manipulation. We have accumulation here. Market drives up, doing what? So as soon as we trade above these highs here, what is this doing? It's enticing those to buy on a breakout, right? So once it trades above these highs, that's inviting liquidity higher. That's the perfect counterparty to send this thing lower and take out those who have been already buying and making money with their stop loss jam below here. So once they trade below that, that offsets them. They're accumulating this at a lower price to distribute it higher. But in this case, I'm not considering that to be a factor because of the 10 a.m. news driver. So it's time and then price, okay? Not price and then time, not the other way around. Now, let's flip to NASDAQ. Okay, I'm not going to just sit on ES all day. So actually, one thing I did fail to mention to you guys. So, hardlined, I'm looking at Thursday's high. Okay, maybe that might be a little bit too much to ask, but I do absolutely see us ramping above this high aggressively by the time this session closes, or the market just closes in general today. And above that, this high becomes more high probability as buy side liquidity, because above it, if you take a look at this purple shaded area with the large eyeball on it, you will see we have this volume imbalance here. Now you're probably wondering, and if you're, you know, well suited with these concepts, you'll be like, wait a minute, we left a body through this volume imbalance. Why are you still looking at it? Well, what's this right here? This is Friday. That's a settlement closing on the week. And then we come into Monday, and that's our Sunday opening right here, okay? So that difference in price, that's going to be our new week opening gap, and that acts as a magnet / fair value for larger funds. So we know that this is a high probability target above Thursday's high. So we have previous daily high with a premium array hovering above it, okay? And then like near term, like if you guys know me, I don't, you know, you're never going to see me always try to get the, you know, highest high and the largest take profit. You'll see me, you know, have runners to those levels. But, you know, if I'm going to be taking it long here, it's likely going to be targeting the most near-term low-hanging fruit, which would be these relative highs placed in from yesterday. So if we go to the 5-minute chart, okay, we'll be a little bit clearer there. Okay, so these internal range relative highs. So let's take our range. So here, this is one thing that I was confused about early on in my journey, so I'll just overview it with you guys right now. So our daily dealing range, okay, so when we open and then when we make the high. So the low, this here is our current daily low, okay, and then this here is the high that was created. So we find midnight, find the most significant low right here, take the high. This here is our short-term daily dealing range. Our overall long-term, or sorry, higher time frame dealing range is this high to this low. Where are we consolidating? Right at equilibrium. Okay, this is not random. We anticipate and expect consolidations to manifest around, at or around equilibrium. In this case, all we've done is traded higher. As soon as we hit equilibrium, poke above it, all of a sudden, we're range bound. Okay, and that is accumulation around this level, and then once we take the sell stops, that would be a catalyst to send us higher and continue the buy program, right? When can you expect stop rates? Once we reach equilibrium. Very random stuff, guys, I know, but listen, when it comes down to it, this stuff repeats over and over and over again. If you pick up on it, it absolutely is an ATM machine, okay? And by the way, like this price action, like the volatility is amazing. Okay, this right here, it's not chop. I know I see a lot of guys saying that it's not chop. There's countless opportunities within this entire week here, and the week prior and the week before that. This is not chop. Okay, you can call it chop if you're greedy and you're trying to go for home runs, but if you don't have greed and that isn't a factor in your trading and you're content with smaller movements, when really you can still make amazing amounts of money. We've seen that in my Discord in the past week. Okay, weekly objectives were literally hit by Wednesday here. Okay, so this is absolutely not chop. There's countless opportunities near Tuesday, at least minimum 3 opportunities, and it looks like this on the hourly chart. But then really, if you go down lower, okay, things start to look a bit clearer. Okay, so this right here. Okay, so we're forming an intermediate term low following the rate on sell stops here. So that's just basically us creating a swing low here. Obviously, we have a higher swing low to the left, and then we drop down, take this short-term low. We have this fair value gap here. Okay, and by the way, if you're watching and you don't trade these concepts, like I don't care about that. Okay, like this isn't a battle of the concepts, who's better and who's a fraud. Like we can trade different concepts and still respect precision and be aware of the psychological aspect and trade these markets together and both make money. Okay, I know guys trading completely opposite concepts of me, and they're making doing very well for themselves. So I'm not. That's not the hill we're on here in these live streams. All right. Okay, so NASDAQ looks a little similar. I'm going to show you on NASDAQ. So once again, we have a very classic weekly profile underway here. So Monday, Tuesday, Wednesday traded higher. Thursday, deep decline, clearing out some type of low. In this case, it was these 2 daily lows, dropping down into a volume imbalance. And then if you take a closer look, the top of this up close candle here, that is a classic bullish breaker. Okay, so we use the closure there. Okay, so several things that we're keying off of on the daily chart, which makes things, more high probability. So just a reminder, we have 12 more minutes to the 10 a.m. news driver. So I never consider, I don't care how clean it looks, how clear as day it looks, whatever the case is. I don't care who's taking trades. I'm not taking a single trade or considering taking a trade until that 10 a.m. news driver comes out. And this is a very specific scenario to the 10 a.m. news driver, okay? Because, this isn't just some random rule that I derived just because. It's because I've been there, done that, and learned the hard way, right? So me trading prior to 10 a.m., I just kept losing years ago. And all of a sudden I was like, wait a minute, what if I just simply take trading prior to 10 a.m. or at 10 a.m. out of my trading when there's a news driver and just wait for 10 a.m. and then look to trade. And all of a sudden things started to get a lot easier for me whenever I switched to that type of mindset instead of trying to force my will and think this time was going to be different. Okay. But anyway, multiple key arrays that we're working off of to continue this buy program. We have obviously the bullish breaker that I just annotated. We have this volume imbalance, and we have these 2 daily lows ran out. Okay. On the NASDAQ, similar to ES, I had higher targets, right? But in this case, we have this swing high here. What's above here? Buy side liquidity. And then above that, we have this inefficiency. Okay, so we have multiple arrays to the upside. Now, do I need to get up here to make money today? No, I just understand that that's the magnet on price that should be pulling it higher. Okay, I don't need to get covered the whole way up here or all-time highs. Like that's just not needed whatsoever. But back to the lower time frames, we're going to take a look at the hourly chart. And I mean, not much on the hourly chart that I can really work off of, to be honest, other than these relative hourly lows here. I'm not sure if we touch this down close candle, but I'll check it out. Okay, beautiful. So we did revert down to this down close candle. Bullish institutional order flow tells us what? All down close candles in a bullish scenario should be held as support. Okay. In this case, we come down, touch the high, bullish order block, and aggressively wicking off that initially. So from there, we go down to the 15-minute chart. Okay. Honestly, surprising to say that ES is a good deal cleaner than NASDAQ, in my opinion, at least on the 15-minute. But all in all, it's pretty much the same logic. You find your midnight opening. You find the first low that was formed after that. Okay, the most key low after midnight forms. You find the high. Here's equilibrium. What's just below, what just so happens to be right below equilibrium? These relative equal lows right here. So when we drop down into a discount, what's the algorithm targeting? Discount sell-side liquidity, okay? So 5-minute time frame following that raid on the lows there, okay, we can now see this down close candle forming, displacement above that. I view that as a change in the state of delivery, but let's remember, I'm not taking anything serious in these charts until 10 a.m. Okay, 9 more minutes. That's it. And potentially we'll find out why in this stream. And okay, it's already looking like this. All right, so clearly it's reverting back to the wick. Somewhat of a consolidation. Just look at the 5-minute chart. Like if you're ever like on the 1-minute chart and you just go straight down to the 1 minute, that's just stupid. Okay, that's idiotic. The only thing that the 1-minute time frame is useful for is to execute a trade that we've already derived a bias from the higher time frames. Okay, because we already know what direction it's going. We're not looking at the 1-minute time frame. Oh, okay, we had a 1-minute market structure shift. We have this 1-minute bullish engulf. Like, come on, like that's just ridiculous. Okay, if you're not using at least minimum the hourly chart to derive some type of bias, and then kind of do a top down navigate through your chart time frames, and then work your way down to the 1 minute. The only reason why we take 1-minute entries is because, in my opinion, they yield the cleanest entries and give you the most solid risk management. So using the 1 minute to your advantage to take entries allows you to have more reasonable stop losses, more reasonable and clear levels to take partials at, that type of thing. So the 1-minute chart is an execution chart. Okay, you should already have your bias derived when you're on the 1-minute chart. So you're not just looking at, you're not getting stuck and, lost in the lower time frames like that. Okay, that's one of the biggest issues I see, particularly with newer traders nowadays. So, I mean, I'm assuming, well, I shouldn't say I'm assuming. I already know. I know for a fact, guaranteed 1,000%, a large amount of traders were buying in here. Okay, maybe they went into profit a little bit. Most likely put their stops break even, and, all of a sudden they get stopped out. Now, I expect this type of price action to take place where it kind of bats around and is a little bit eerie. With a 10 a.m. news driver coming into play. So when I say good trading comes from waiting for manipulation and then looking to take a trade, that perfectly aligns with when excitement is high, sit out. When excitement is low, that's when you should be taking your trade. Okay, if you follow that principle, all of a sudden things will be a lot more easier for you in terms of becoming profitable, right? So it's very simple stuff, guys. You ask yourself, when are these markets likely to be can't even get my words out here. Excuse me. When are these markets most likely to be manipulated? Well, look at the economic calendar. There's a big red folder and it says whatever the economic news is. I don't really care for that stuff. I don't look at the data. It holds no bearing on what I'm looking at in the charts here, okay? I don't care about that stuff. Um, Basically, what you want to use the economic calendar for is just to navigate through your week, and it's like a roadmap, okay? So, using the economic calendar advantage and actually following the rules around those time windows, like what you're seeing here, I'm not considering anything in price until 10 a.m., right? That's the rule here. You apply that throughout the week, and your strike rate will go through the roof instead of, just trying to be in every single price fluctuation. Denise, which broker do I use? So, personal funds, that'll be AMP Live, and then prop firms. I was using Apex for a little bit, but primarily and most of the time it is Top Step, okay? But yeah, I'm not gonna, I'll never recommend any particular prop firm because they all have their, issues and downfalls. The only thing I will, advise you not to go for is the discounted brokers. Okay, that's foolish. First of all, if you take this the wrong way or you feel some type of way from me saying this, it is what it is. But if you don't have enough money to buy a combine or, you don't have enough money to fund yourself to trade in the first place, like you shouldn't be trading because it's just going to be a great deal harder for you. You're going to place a lot more emphasis on a given trade. You're going to have a scarcity type of mindset and it's just a mess, okay? And I always say this pretty much in my Discord every single day. Okay, you need to get yourself right. You need to have money in your bank account, save some money up, build yourself up, and then look to trade. Okay, you're not looking to trade to dig yourself out of a hole or, that magic pill that, saves you and all of a sudden you're making six figures, okay? You get yourself right first on a grounded level, okay? Get a respectable amount of money saved up, and then you look to trade, okay? Your psychology is going to be a lot better. You're going to be a lot more level-headed on the charts, and as a result, obviously, you're going to be more likely to be profitable, okay? Now, we see ES moving around in this range here, right? This is like, I don't think this is random in the slightest. I would classify this as time distortion, okay, in this consolidation. Maybe like someone else streaming like, this chap, we got this chap going on and I don't like this price action. Dude, look at the economic calendar. Like, you really think it's poised to move right before a news driver? No, as soon as that 10 a.m. news driver runs out, stop losses are smoked right out the gate, okay? It happens every single time. This stuff repeats. And the same type of sucker plays manifest in the charts when it's poised to, okay? We're going to be here for a while, so I'm going to need more water. All right, where were we? So yeah, one more minute to this news driver. So we'll see what type of fireworks we're dealing with. And there it is. Beautiful. So buy side liquidity has been engaged, absolutely. And just as prompted before the fact, we are gunning in the direction of every single level I called out. So near term, yeah, say I was trading this, this is probably where I'll be just taking my profits, or if not just partials, and then I'll be holding on runners for previous daily high in the form of buy side liquidity. And then above that, we have this volume imbalance on the daily chart from ES. So target here, here, and here, okay? All right, Mando trades. Quick question. I'm about to get, wait, I got this thing in the way here. You're about to get your first payout. Well, first of all, congratulations. You have now entered the 1%, okay? Most traders that even get funded are not receiving payouts, so you should definitely be proud of that. But anyway, how did you use your payouts to go full time? Any strategic plans you use to scale up? To be honest, my journey was started from literally just working countless hours in warehouse jobs, saved that money up, got a few prop firm payouts, combined that money together, and you know, the rest was history. But I still trade prop firms. I still trade personal money. You know, both obviously result in me making a respectable amount of returns from these markets. But using your payout, I don't. It's hard for me to say for you because I don't know how much the payout was. But let's say it was $2,000. I would put 1,000 of that away, and I would use the other 1,000 to just buy more, like buy at least 3, however many funded accounts you want. And assuming you have a model that works, and you know you are confident in your abilities, I would just buy several funded accounts, get them funded, put a trade copier, and go from there. So basically, what you're doing is, the more money you make, you're simply just using that capital as leverage to make more money on any given trade that you take, okay? All right, so there we go. There's the first target engaged, okay? So like I said, if I was trading this, okay, this would be majority of my contracts would be off right here. And then runner should be held for Thursday's high and the volume bounce. Now, is this very, very classic price action that repeats over and over again, and is it clean? Yes, absolutely it is. Did I find my entry that fit, suited well with my, model and my trading plan? Absolutely not. Why is that? Well, we consolidated, and we understand that I wait for 10 a.m. to find my entry. In this case, 10 a.m., what does it do? Just shoot straight up right for my target. So let's say 10 a.m. ramp below this low here first, turtle soup raid. Guess what? I have a buying opportunity, and I'm going to be holding for here. However, 10 a.m. slam straight up. In this case, I don't have a trade yet, okay? Very, very simple stuff, guys, okay? If you block out social media rules and whatever, what everyone else is doing, you simply just lock in, focus on yourself, follow your rules. I promise you, it'll serve you a lot greater than, whatever your circumstance is now, if you're not quite where you want to be yet. So honestly, yeah, NASDAQ looks relatively similar here. So once again, same logic here. Okay, we have this premium for value gap delivered. And when I say premium, remember, our higher time frame range is going to be from this high down to the low. Okay, we just touched 62% retracement. And then just for value gap, remember, I'm not expecting us to stop here. Okay, I definitely see us ramping above this Thursday high. So when everyone sees this, deep decline, it's bearish. This is the beginning of the sell-off, and I mean, it just, I can't tell you how many times this classic weekly profile repeats. Thursday decline into a low, Friday, very, very bullish. Now, does that mean every single time, does this mean every single time Thursday runs below a low, that means Friday is going to be bullish? No. Okay, you have to have daily bias and narrative. And in this case, we have these targets that we're anticipating to be ran into, okay? As soon as I got onto the stream, did you see me, call two sides or say we might trade below this low if we don't go up here? No, I got on stream, had these levels mapped out, and I said everything I'm saying now, okay? Man, no trades, of course, brother. I wish you best of luck. Wish you best of luck on the remainder of your journey. But yeah, guys, whatever takes place here today, like I told you guys, this will likely be my final time going public. And I have my Discord members asking me, why is there no live stream? I guess they did not click the YouTube link. Thank you, Brian. Appreciate it. All right, so anyway, this here is going to be I'm actually glad we're signing off now. This is going to be a perfect example of why taking partials, despite how bullish it looks, despite whatever your targets to the upside are, you always want to take the partials because nothing in these markets are guaranteed. Take your profit when you can. So in this case, all right, so look, let's say that there was no 10 a.m. news driver. Okay, I'll be looking at price. I'm like, okay, well, I'd like to see us drop down below the lows. And then do we have a discount priced in? Yes, we do. Do we have the daily time frame backing bullishness? Yes, we do. So we have sell stops taken. Those stops are accumulated in a discount, and I'm expecting it to distribute those higher. So I'll drop down to the 1 minute chart, which is where I take 95% of my entries. Okay. I would see this drop down here, and I would take the 930 opening range low to the high. Okay. And as soon as it drops down to that discount of this displacement leg, okay, in the fair value gap, that to me would trigger a long and absolutely suit my trading plan, okay? But simply just one, outlier here with the 10 a.m. news driver, simply just waiting for that. So it is only 10:07 a.m. I'll be here likely for about another hour, and depending on what we get here, if my setup, manifests in the chart, then I absolutely will be pushing the button in front of you guys, and, we'll see what goes on. So these relative equal highs here within the range, this would just be, our classic internal range buy side liquidity. So all you're doing is finding your range. Okay, we consolidated equilibrium, and we have our stop rate at equilibrium, which is when we anticipate this stuff to happen. Remember what I told you guys earlier, right? From there, okay, now that sell stops have been ran at equilibrium, the market is now free to continue the buy program towards whatever its targets are. In this case, near term, we find equilibrium. Where's the first high above equilibrium? This right here. There's going to be a lot of sell stops from those who have been making money yesterday, trailed above here and here. So buy side liquidity here, buy side liquidity here. It's like everything I'm saying here, you take it for what it is. Like if you're sitting here listening to what I'm saying and trying to overcomplicate it and thinking that there's some extra secret sauce that goes into what I'm analyzing here, then you're going to come to some big realizations. But overcomplication is definitely the killer of many individuals that should be profitable traders but aren't, because they can't have a simple top-down approach and really just use one specific model or whatever else they're looking for. So we have this initial gap formed from the 10 a.m. news driver. We revert back down to that instantly, wick off, creating this swing low. Obviously, I would anticipate that it continue and take out this high. And believe me when I say this, there is short-term buy side liquidity above this high. I promise you. You're probably like, wait a minute, who the hell is who is putting their stops above here? A lot of individuals, as soon as it rallies up, makes this high, deep in a premium, they think it's overbought. As soon as it slams down, they view that as a sell signal. A great deal of buy stops are being rested above here, so, we're about to see them have a great deal of regret in about a second or so. Now, let's go ahead and take a look at, so I'm not going to look at Dow, but We can just sit here and laugh at it because, I mean, Dow is just, I don't know. I just personally am never going to trade Dow. Now that I'm looking at it, though, the volatility is insane. We actually just took out Thursday's high already, which I'm anticipating for ES and NASDAQ, obviously. Dollar index. Basically, if you have no knowledge of dollar index, we just simply look at dollar index and try to analyze it inversely to what ES and NASDAQ are doing. So in this case, bearishness, this is the counterparty to ES and NASDAQ rallying. Okay, so whenever they are moving opposite, the probabilities are definitely through the roof. If you see them moving in sync, okay, it's likely not to be the greatest trading day in the world. Okay, I laid out many targets for all my Discord members, and we reached this weekly consequent encroachment of the wick. And apologies for saying consequent encroachment and maybe confusing you. That's all it is a fancy term for midpoint of this wick right here, okay? And then below that we have this weekly low, which is what we're drawing towards. And honestly, I see nothing but downside on dollar index until we reach that weekly low that I just showed you guys. So NASDAQ, both ES and NASDAQ showing no signs of slowing down here. ES very close proximity to Thursday's high. And you guys are about to see me get it right. Only if being right was equivalent to being consistently profitable for years on end, right? There'd be a lot more folks out here showing real money and real results, okay? So another thing that you can look at, it's not required to really consider, but if you take a look at the NASDAQ, obviously main objective is Thursday's high, but if you're already in a long position, I would view this candle's opening as a partial opportunity. So we understand that there's buy side liquidity above previous daily high here, but the bulk of it is where? Right above the body. Okay, so that's going to be our classic, what we call a rejection block. All it is the market opening on this daily candle, rallying up, creating the high, and then once we come down close, the bulk of the volume, when we're talking about liquidity, is going to reside right above the bodies here. Okay, so that is going to be target number one, and then obviously terminus is going to be previous daily high and up here. Okay, so the reason why I'm telling you this is for future reference when you're taking trades. It's definitely favorable for you to look at this as a partial opportunity and take partials, okay? But anyway, back down to the 5-minute chart. Let's see. So I don't believe I'm going to be engaging in longs. I mean, that'd be pretty foolish for me when we're this close to a high. So what I'm going to do is I'm going to wait for it to reach all the targets that I gave you guys literally as soon as I started the stream. Honestly, what value will you necessarily get out of a stream like this? Okay, so what you want to do is you want to go ahead and take the stream, record it the whole way back once it's done, listen to everything I said at the beginning, and then compare and contrast what you see on your chart now. This is me proving 1000% that these markets can absolutely be consistently predicted. Okay, you're going to hear a lot of guys, maybe, you start telling people that you're trading and, you're getting into this trading stuff, and they're going to hear that and be like, oh, come on, man, like, you're going to lose your ass. Like, no one actually knows what the market's doing. Like, intraday's noise, and you're going to hear all that stuff, okay? It's just simply not true. And if you watch live streams such as this is okay, this is all the proof you need, all right? Just don't listen to that outsider stuff because, I mean, like I said, these markets are so obviously manipulated, and it's very easy to pick up on if you have enough chart time and experience, okay? So me getting on here and saying all this stuff isn't just for me watching a couple YouTube videos, okay? It's me showing up to live price every single day for 4.5 years, okay? Sounds like a lot, right? But that's truly what it takes to get this level of precision, right? And if you're not willing to submit to that time, will it take you 4 years? I don't know. It took me 2.5 years, but, time thresholds are different for everyone. Okay, so we're relatively matching the high here. I'm not surprised to see it wick off around this area because that would just be engineering of more buy-side liquidity. Okay, so believe it or not, like I was just saying in the other scenario on a smaller scale, once we trade up to this high, wick off, people are seeing this as a strong resistance level. Okay, they see this wick as like a doji or whatever else, and they're going to want to short this and put their stop above here, right? So this simple sensation taking place right here, all this is engineering more buy-side liquidity. So whenever they ramp it through the highs here, smart money is making more money, okay? Can't make it any more clear than that. So I can go ahead and take this off because that has been slammed through. And we're about to see previous daily high be engaged here any minute. Now, I know the question some of you are asking in your mind right now. Will I potentially seek a shorting setup after previous daily highs ran? Okay, it just comes down to what signatures perform once we run that high. I'm not trying to force any idea. I'm not coming into the session. You never want to come into the session thinking the markets owe you something like, oh, dude, they got to give me that damn turtle soup, or I'm going to be frustrated. Like, the markets don't owe us anything. They're not here for us to make money. They're here to take our money, take what you can get. Okay, let the model come to you. Do not come into the markets trying to force your will on anything, because you're never going to make money with that type of mindset or approach. So yeah, we're actually having a very large sell-off here. Remember, Dow already took previous daily high. ES just matched it. So this high comes in at, this 10 a.m. high, comes in at 5,662 and a half, or and a quarter. And then this high comes in at 5,657. Okay, so off by about 10 handles there. So obviously I'm not looking at this as, oh, okay, this is a reversal point. Okay, like I already told you guys several times now, I'm just viewing this as, you know, more buy side liquidity being stacked up above here now. So, okay, coming back down to the balance again. So we're reclaiming this time-based fair value gap, okay? And that sounds like a buzzword, right? But it's a very simple logic, actually. So as long as we're trading through this initial gap that was formed from the 10 a.m. news driver, we're still referencing this, okay? It's a very important price point and very precise, okay? Specifically because of the time it was formed, all right? So I would view this one, so like basically because of the time it was formed right after the 10 a.m. news driver, this fair value gap holds more importance than, say, this one or this one here. And let me flip to NASDAQ. Okay, looks pretty much relatively the same. So what I want to annotate here is, with us continuing the buy program, we absolutely need to see this balanced price range quickly rejected and respected. So in a buy program, we see that we offered sell side of the curve, we came up, offered buy side of the curve. So when we come back down into it, we need to see the body respect at least the midpoint. Okay, there's no need for the market to disregard this. This range is balanced. The work is finished here. Okay, so when we have a draw on liquidity and the market's poised to trade higher, we look at it rallying down here as support, right? And look for the buyer program to continue. Now, say we offset this balanced price range. Obviously, everything I'm saying is going to change, but I don't believe that it's going to take place. I'm very convicted in continuation on the upside, as I have been from the beginning of this stream, okay, before the market's even open. Let's see here. So I would have preferred it to wick down into here, okay? Could act as a breakaway gap, but we're about to find out. Take a look at dollar index. I believe dollar index pierced this low here. Okay, so that's a good explanation for the inject in, the market being flooded with orders. So when we take a sell side, so like in this example here, when we take a low, I mean, this is a very obvious depiction of the market being flooded with orders and injected volatility after the low is taken out. It's not random that as soon as the low is taken out, you see this aggressive of a rally. Okay. And okay, beautiful. So we're dropping down. It looks bearish, right? This isn't a shorting scenario for me. Is the daily time frame in tune with me shorting? Do we have a very clear draw on liquidity to the upside, and can I frame longs right now? Yes. So why the hell would I be looking to short just because we're dropping down? That's what they want you to think, okay? Fabian Stees, yesterday's high. Yes, absolutely. So definitely would have been preferred to see at least one of the lows to be engaged here. So meaning like maybe NASDAQ took the low and then ES failed to do so. So whenever you see, guys, basically if you see someone saying like they need SMT divergence to take a trade, I mean, that's cool. Maybe they know what they're talking about, most likely not, but SMT is just one small confluence from an already derived bias and narrative, okay? You never want to put so much emphasis on, a tool that should just be used for one added confluence rather than, that being the reasoning that you're taking the trade. And then you're wondering why you're getting stopped out because you don't have higher time frame narrative, right? So like I said, I don't view this as a reversal, okay? I'm not expecting it to trade lower. I have eyeball here for a reason, right? So what we're seeing here, once again, is we have a reclaimed time-based imbalance, and we're now having significant displacement above of that, okay? Once again, like I see certain scenarios and I'm like already understanding like a lot of people are trying to like taking that setup and then they get stopped out and they get frustrated, but they're lacking the discipline to wait. They know that this isn't their model. They know there's higher objectives here, but they just want to get that quick, fast cash and pass that fund to the account right now. Okay, 90% of skill for trading comes from simply waiting. Okay, if 90% of traders now that are unprofitable, they just apply that one simple concept of mastering their patience. That's the gap between them not making money and them actually making real consistent money. Okay. Do I think it breaks 565? Yes, I do. Absolutely. 1000%, okay? Now, how have I found a very, very sound entry point that would yield me and respect my risk management plan and my overall trading plan and looking for a model? No. Have I called every single thing out with absolute precision before the fact and it happens before your eyes? Yes, absolutely. Once again, that's not me trying to be arrogant, beat my chest, look at me, I got it right, that type of thing. It's me simply proving to you that these markets can reasonably be predicted. Okay, if you have enough screen time experience, it's going to come easy to you. The setups come to you, you don't come to them. Okay, we're not overly analyzing on lower time frames. Like just like begging for a setup. Okay, you patiently wait. The setup will come to you. Once you have enough screen time, it'll come very, very easily. Okay, sometimes it won't be an entire session. Sometimes it won't be in a given day. Okay, and that's fine. If you're gonna sit here and force setups, then you're just gonna lose equity before your model actually performs. And that's one of the biggest pitfalls in a lot of traders. Like, they have a precise model, it works for them, but they're losing so much equity unnecessarily before their model even comes. So by the time their model comes and it hits, that trade hits, right? It feels good. All they're doing is coming back to break even, or maybe just making up for some losses that they took. So that right there, what I just explained, is pretty much one of, if not the biggest reasoning for unprofitability. So, looking through the horoscope here in the charts, it is only 10:26 a.m. There could be potentially a 10:50 macro opportunity, or going into 11 a.m. opportunity. We're going to find out, and if it is, I'm going to push the button in front of you guys. But just because I'm live streaming, that does not mean I'm going to, push the button. Okay? I see a lot of live streamers do that. I watch them after the fact because, I'm obviously live streaming every day, so I'm not going to watch their stream, right? Live time. But I'll go back and I'll watch them, and, it's so obvious that they have this unneeded pressure they're putting on themselves to take an entry just because they have viewers. Okay? Instead of just sitting down and doing what they're supposed to do and analyze the chart and, give out real value. Okay? Instead of just trying to put on a dopamine show and, get that winning trade in front of everyone. So, we're about halfway through here. If you guys have got something out of this so far, or anything resonated with you, go ahead and put the thumbs up to let me know that's how you're feeling. Okay, so once again, we reclaim this Fairway gap. If you take our short-term dealing range, so once again, just like I used midnight opening to the high, it's the same exact thing. We use the low relative to the news rate opening. Okay, so you take the low to the high. What did we do? We traded right down into, to the tick, 62% retracement, reclaiming a Fairway gap. So we're trading down into a discount. Discount what? Time-based imbalance and an optimal trade entry. From there, I expect that to continue higher. A lot of guys are trying to frame some type of reversal here, right? But then we see expansion ripping right through all the opposing arrays, such as what? This right here is a breaker, right? Trades right through that. Fairway gap, trades right through it. Another Fairway gap, trades right through it. That's 3 PD arrays smoked. That's a dead giveaway of us gunning for the highs now. So we drop back down. Here's a Fairway gap. That's smart money. Reaccumulation of longs, and then you're going to see it distribute up in this purple shaded area. Okay? So this purple shaded area is the main outlook and draw for E-mini S&P. Okay? So NASDAQ broke above the high. NASDAQ has yet to see that, ES has yet to see that, but it should any second now. Jower, what do I mean by time-based Fairway gap / imbalance? Okay, all it is very specific key times a day. I'm not going to go over all of them right now, but we have a prime example here. So what you do is 10 a.m. news driver. That's a very key important time because it's when manipulation manifests in the marketplace, right? What you do, it's very, very simple. No overcomplication, nothing you're going to find in some secret course, okay? Ramps up. You look for that first imbalance in price that was formed following that key time of day. In this case, it's at 10 a.m. news driver. You map this out on your chart, you extend it out, and as long as we're trading to it and trading through it, that's a we're referencing it. So it's a very important level, and it's more important than any other fair value gap in this session here. Okay, and we see that being utilized here. So we trade down to it once, slams up, engineers buy side liquidity here, drops down. A lot of people want to sell this. So what I'm about to say here is very, very important and something you're not gonna, hear anywhere else. For value gaps, a lot of foolish people that sell courses, they want to try to sound new, and they're trying to, come out with this new idea that fair value gaps have liquidity within them. Whenever it's trading down to a fair value gap, that's taking liquidity. No, you are wrong, and they know that they're wrong. They're just trying to bring new information and sound smart. When we trade down to fair value gaps, what this is doing, what is taking place, what's actually happening is liquidity is being invited into the marketplace. Think about it. We're dropping down. The higher time frame, we're bullish. And when we drop down into this fair value gap, that invites short sellers to enter the market. So what are people doing when we drop down here? Shorting it. So when we trade down to this key time-based imbalance, which is more important than any other fair value gap, like I said, once we trade down into that, that is inviting liquidity lower. And that's the perfect counterparty to utilize this, use it as support, and continue it higher. Okay? So, I mean, once again, just on a smaller scale, like we're creating these highs here, it's way too artificial. I'd expect that to be ran out. Does that have to retrace deeper? Possibly. Now, wait a minute. You're seeing this right here, right? So you know that I'm bullish. You know that I just explained everything with the time-based imbalance. We utilized it. And then we see this right here. You're like, oh, isn't that a longing opportunity? It's not. We're in a very deep premium. We're very close to the draw. And I would have to open my stop loss the whole way down here. That doesn't suit my risk management plan. Very simply put, I'm not taking the trade. Okay, there's countless opportunities, millions and unlimited trading setups that are going to come to me in the future because I'm never stopping this. I'm trading to the day I die. Okay, time making money. It's not stopping. Okay, there is unlimited opportunities to come. I'm not going to waste unnecessary equity on a low quality setup that doesn't suit my plan just because I'm live streaming, right? So all right, so watch this right here. We're dropping below the swing low here. But anyway, back to my conversation. You want to view trading, you're not it's not a video game, it's not any of that stuff. Like, change your mindset. Very simple mindset shift. Okay? I want you to do this. Think about trading as if you're running a classic brick and mortar business. Okay? You're going to view things a lot more differently. So you're looking at it here like, oh, wait, can I really afford? And do I really want to make this transaction here and buy this? Like, do I really need this right now? And, is there better opportunities to come in the future? Like, think about it like that. You're running a legitimate business. You're not just sitting here gambling evaluation accounts or whatever else people are doing nowadays, okay? Get an account, treat it like a real business. You shouldn't be buying backup accounts because, first of all, if you're buying an account, we're assuming that you know what you're doing. Okay, if you don't know what you're doing, you need to get in the fucking charts and actually put in the work. And, watching live streams like this obviously is going to fast track it, but you still need to put in that time and effort, gaining experience, coming into live charts every single day, or at least every single day that you can. I understand that we all have different circumstances and schedules, work, whatever else, but show up as much as you possibly can. Experience is the greatest teacher. Okay, you're not going to learn everything on a YouTube channel. You're not going to learn, buy a course from Twitter. Like, the most you're going to learn from these charts and the most knowledge you will gain is from showing up in live price data, watching it and studying it every single day that you can. That is it. Okay? That's how I did it, and that's how you're going to do it if you're going to be profitable. So we could classify this as an SMT divergence. Okay, NASDAQ ran above the highs, ES failed to, but once again, the draw remains here. So if I know that we're this close to a daily draw on liquidity that I've been speculating the entire morning, I'm not going to sit here and try to short. Okay, I'm going with the grain, not against it. There's certain there's very specific situations where you should go against the grain and try to catch reversals. There's other situations where you want to use that order flow to your advantage, and finding that middle ground and the perfect balance in those different scenarios is very, very powerful. Okay, if you're always trying to catch the reversal, it's going to be tough for you. If you're always trying to, trend as your friend it's going to be harder for you. But if you find that middle ground and you're able to do both, I promise you a whole new world opens up to you. All right. So let's take a look and let's see if it wants to gun for these lows here. Okay. Like I said, higher time frame, I'm bullish. Okay, and that's until we reach a previous daily high, specifically on ES. We honestly could create some type of SMT where Nasdaq does not take the high, but obviously we're seeing relative strength on ES, and then Dow is the oddball and has already taken out previous daily high. Okay, and once again, dollar index reached very key objectives. Okay, we're continuing to fall. We're very, very bearish on the dollar index, which is the counterparty to bullishness on the futures markets, right? And remember, okay, we have this sell side low here. Now, wait a minute. What I just showed you on the ES chart, or NASDAQ, sorry, on the daily chart, I told you sell stops are below the absolute low, yes. But the bulk of the liquidity, the bulk of the volume, when we're talking about liquidity, is right at this body here. So us engaging this low here, obviously I'm assuming none of us in here trade dollar index. This would be a partial opportunity, okay? And then you hold on full terminus for the low. All right, so obviously what I'm seeing here is ES was able to ramp up. We took out the bodies here and this swing high. We displaced lower, closed within this inversion. So we offered buy side of the curve, sell side of the curve, ramps up, touches the high, continues lower. Okay. NASDAQ, everything I just said transposes over here, except we took the high, so that'd be a short-term SMT divergence. Am I interested in shorting it? Well, if you have to wonder what the answer to that question is, you haven't been paying attention, okay? Now, if you look at the 5-minute chart, a lot of times I'm not interested in taking a trade when we see, wicks like this. Okay, so we ramp up, trade down, 2 wicks, very clean bodies here. Understanding there's liquidity there, yes there is. Trades down, okay? And right now I'm speculating and wondering if we have to clear out these relative lows here, okay? And once again, it all reverts back down to this time-based imbalance. So we're going to go ahead and extend that through, okay? Because we're not done with it. As long as we're still trading within it, okay, it's still a valuable reference point. And by the way, that balanced price range that I discussed with you earlier on the NASDAQ, okay, wick down, very strong reaction above of that, and then ES, okay, trades down to it here, see that? Very strong reaction above of that, and a bullish buyer program, and we're looking for higher targets. This is the exact signature you should see. So let's go ahead and measure this out. So you take this imbalance high to the low. Where do the bodies reside? Once again, what's the logic behind this right here being a key reference point? We offer sell side of the curve, buy side of the curve, come back down. Where are all the bodies at? What right here, this blue line, that is half of the balanced price range. We trade down to it here, bodies remain above. Trade to it here, bodies relatively at that midpoint. Slam back down to it here at the 9:30 opening, take sell stops. But one of the best signatures you're ever going to find in price when using this type of logic is whenever you see a run on sell stops and the body closes above a level like this, which is the midpoint of that balanced price range, that right there is, I mean, the probabilities are just through the roof. Okay, that's just a very strong signature in price when we're looking at, bullishness. So very obvious that we're going to be, we're drawing towards these lows here inside of the range. So once again, our range is going to be, you find 10 a.m. Here's the swing low relative to that. You take that to the high. Okay, we're not using this. Okay, we're using this on a basis of time. So we use the swing low to the high. Here's midpoint. We're trading back down to a discount right now. So below in this discount range, what do we have? We have obviously relative equal lows. But more specifically, we have the untapped portion of this time-based imbalance. So we worked in half of it here twice, and then below that, this is still inefficient, okay? Now, let's go ahead and flip to the regular trading hour gap. Obviously, we have a significant regular trading hour gap. To be honest, I expect this to stay open. Now, say we had like some crazy displacement to the downside and we disregard this balanced price range, and obviously, yes, I'll be looking at something to get short into the regular trading hour gap, but that's just not what I'm anticipating as of now, okay? Still want to see bullishness. So any minute now, should respect this right here, okay? So we're bumping up into that. Now, if it trades any higher, then I would just simply reference this right here, and obviously bearish order flow when we're looking at these lows here, this should be held and then send us lower. Okay, now if we break through this up close candle, then it becomes a little bit more problematic if you're trying to look for something lower, right? Okay, so it slammed up to that opening there. Okay, initially wicking off beautifully. So like I said, us ramping up into this is just a classic institutional order flow outlook. We would see this respected, almost like a bearish order block, and then obviously gun for where it really wants to go. Alright, so disregarding that, boom, I can take that off. Now listen, I'm being optimistic and willing for it to run down to these lows, but when it comes down to it, this could still continue higher here because there's very specific levels that we traded into. This right here is a rejection block. What did I just explain to you guys several times? This right here, bulk of the liquidity resides in the volume here, okay? We trade down, revert back into the midpoint of this wick, okay? Almost touched the time-based imbalance high, which would have been nice to see. And then everything I just said, same thing for NASDAQ here, except we're also touching the high end of the balanced price range here, okay? So several levels we're trading into, and then also we understand that we're back into a discount, okay? And then this is what it looks like on ES once again, okay? Trading down to that discount, 5-minute bodies, swept. So remember, you're probably wondering, wait a minute, like these are just too clean down here. You're right, it's clean, but when you become more seasoned, you understand that this is not a requirement. Okay, these lows are not required to be ran. Where is the largest pool of liquidity right now? Right now. Above previous daily high. And even with previous daily high, this is already a very key liquidity pool. A lot of stops are above here. But we wicked up. We even wicked up and matched the high and traded off. So we have even more buy stops engineered above here. The largest pool of liquidity is absolutely to the upside. So if they're on a mission to get to a higher time frame buy side liquidity pool, do you think they're really gonna care if these relative equal lows are not ran? No, absolutely not. Okay, can it be ran? Yes, and then offer a buying opportunity, of course. But on the other side of things, once I learned, like, oh, okay, well, that is not a requirement. I was able to reasonably get more in sync with what the markets are actually doing, and be able to take setups, not worrying about some lower time frame relative equal lows. Is it a bonus with them being ran and then seeing like displacement off that retracement? Obviously, okay. But the point is, it's not always required to see some type of lower time frame relative equal lows, relative equal highs ran. Okay. What do I think it hits today? Well, I think I already explained that. So this purple shaded area, we have ourselves this volume bounce. Okay, and this is also a new week opening gap, which is the reason why I'm still referencing it as a premium array. And then obviously previous daily high right here. All right, so NASDAQ just took the lows there. Beautiful. All right, once again, we're going to go ahead and map out that time-based imbalance. So we're back into it. We're referencing it still. Okay, it doesn't matter. I don't care how many times it closes it in or how many times it works in it, okay? It doesn't matter. That has no bearing. It's still something that the algorithm references. And if they're referencing it, I absolutely want to reference it. Now, if you don't believe in that stuff, you don't think there's algorithms taking play in the markets, it doesn't matter, okay? We can have our different outlooks. It really doesn't matter. As long as you're making money, that's the only thing that is significant, okay? All right, there we go. So ES just took the lows. Okay, so we're in this 5-minute imbalance. So yeah, NASDAQ very extended here. So obviously I'm not going to, sit here and try to frame a reverse off the time-based imbalance. It literally just shreds straight through it. Okay, so it's closing below it and looking like it wants to draw for the opening range lows here. Okay, and opening range lows is just simply finding the 930 opening. Okay, and these were the lows that were created. So this would actually be a time-based liquidity pool. And once again, now we can pull out that regular trading hour gap, because I said for me to anticipate this to be traded into, I would need to see this balance price range being disregarded. Is it being disregarded? Yes, absolutely. Eyes go to midpoint. So matter of fact, let me map it out. So let's see here. This is our previous settlement closing. Here is the 930 opening. Okay. I'm going to find the midpoint. And wow, we're already touching it right now. Boom. So we have regular trading hour gap tagged, and we now have all internal sell stops ran. And then we have this right here. This is the imbalance formed in the Asian session being engaged. Let's take a look at ES. Okay, so the opening range low was just engaged on ES as well. Let's take a look at the regular trading hour gap here. Okay, working in the upper quadrant. So I mean, very uncharacteristic for a previous daily high not to be engaged, but if it's not taken today, well then guess what? I'm just simply gonna anticipate the next week, Monday, Tuesday, Wednesday, whatever, to target that. Okay, so that can just be a later target going into next week. But for now, it seems we had to drop down one more time. We just took the opening range low. Once again, NASDAQ took the lows as well. Okay, so I mean, one thing to really take away from here is notice how bullish I was. Notice how I wanted that previous daily high to be ran. I wanted this level to be ran up here. I wanted this level to be taken. It got very close to it. Okay, I was about 10 handles off. Sorry. But I wanted, this is what I was anticipating, expecting. The whole time we're analyzing the charts, did you guys see me take an entry? I tell my Discord members every single stream, Monday through Friday, I'm streaming every single day. I'm saying what? Okay. But anyway, I'm saying what? Sorry, I got a little brain freeze moment there. But what am I saying every single day? Why am I losing my train of thought here? Oh, yeah. So if you do not see me physically taking the trade on the screen, that like there is no signal. I'm not signaling you to enter the marketplace. If you see me physically putting the trade on the chart, you see my entry, you see my stop loss, you see my take profit. There you go. There's your signal. You can go and copy my trade. If I'm not in the marketplace taking a trade, which I was very so much looking to take some type of entry here, did I find my footing? No. I was bullish, right? But did I find a reasonable entry that would yield a reasonable stop loss and my actual model that I look for? I have three very specific models. I have yet to see one of them perform today. Okay, very specific elements that come together and mesh into one high probability trading setup, and I just have not seen that yet. So anyone trying to force something in here, this kind of back and forth going on, they're probably upset, but they likely did not stick to their model. And if they did and they made money, good on them. That's what we're here for. But Rican Wreckage says new day opening gap. So I'm actually glad you said that, because now I'm gonna go ahead and look at it. So okay, so that'd be the Hoy down here. Let's take a look at NASDAQ. It's probably closer. So I'm gonna go ahead and stand out new week opening gap. Okay. So yeah, basically you're saying new day opening gap. Now that I'm looking at it, like I only need to reference new week opening gap. Say I don't need new day opening gap. When I have a new week opening gap, that's gonna be my strongest price points for when I'm looking for fair value. So that's just what I'm gonna reference. So obviously we're on a deep discount. We have just reached new week opening gap. Fair value has been yielded in the markets. We have all internal sell stops taken. Okay, so when we take our range, we have okay 79%. Blue guy, I just read two of your messages. Apparently, I promised a payout. Well, actually, I just literally posted a payout 2 days ago on all my socials. So clearly, you haven't been paying attention. But yeah, let's get him modded out of here, because oh man, I think someone must have blew an account or something. But anyway, we're in that sweet spot of the range here. We have 62. So you look for 79 and 62. In the middle of that, that's what we call our sweet spot. That's going to be your most accurate level with retracements. Okay. So within that, we really look at that and we ask ourselves, what are the body closures looking like? Okay. Oh, wait a minute. Hold on. All right. All right. I'm sorry. I'm sorry for uh entertaining that comment. I just realized I'm pretty sure that's that I think he called himself Trader Anonymous or something, joined my group, and he didn't get the signals he was looking for in like 3 days, and he didn't get what he wanted in 1 week of joining me, and that was a whole thing. But anyway, we all know that give me a now mindsets it's never going to equate to any type of reasonable success. So no need to engage with that. But anyway, we've traded down into a deep discount. I showed you guys the retracement price point on NASDAQ. We traded down into new week opening gap here. Okay. Once again, these consolidation low has been ran. This black line, that's our regular trading hour gap low, or sorry, midpoint. Okay. That has been reverted to. So we have many, many key levels driven into. Okay. And honestly, I don't see a reason to look for shorts, particularly because of the weekly profile that's underway here and the engineered highs up here. So definitely throughout the stream here until I close this, I'm still going to be looking for a reason to buy. All right, so we did just have a change of state delivery following the run on stops and every other level I just gave you. We just shifted above this swing high, back down institutional order flow into this fair value gap. Okay. Beautiful. Beautiful stuff here. So I'm definitely not, once again, I'm definitely not viewing this as an opportunity to short it. Okay, whenever I see new week opening gap delivered and an instant reaction off of that, that just adds and confirms that all this was manipulation lower to then eventually send us higher. Okay. So nice rally here on ES. Okay, let's see if we can get above this 10 a.m. imbalance here. Why wouldn't I consider a buying opportunity like this one? Well, I am right now. So if it were to just so happen to present me an opportunity, I would be buying it. But real time, I just wasn't engaged with the lower time frame here for me to, like, as soon as I looked at it on the 1 minute, it already snapped up, and I'm not buying the market as it's rising up. Okay, I buy the market as it's trading down. Okay, so that's just that one, that one moment where it feels uncomfortable, but you have to get comfortable with that uncomfortability. So when it's rising down, that's when you want to focus on buying, rather than it's rising up and it's momentum, and then you're buying. If you kind of engage the market that way, it's just a lot easier for you to get stopped out. Also, not to mention, one more minute, we're going to open on a new hourly candle. That's going to leave this very inefficient wick behind. So with the already predetermined bias of up here, okay, which I'm honestly surprised we've not reached it yet. It's not very typical, but once we close here in about 30 seconds, you're going to see it really revert at least minimum to the midpoint of the wick, and then from there we'll see it come up to the highs. So, all right, so look, one we're in 11 a.m. now. Okay, we have this very large wick left behind. I can stand to be corrected. I could be wrong, and you guys can see it all live. But I know 9 times out of 10 in a market that's, poised to trade with any type of high probability, this wick is going to be absolutely worked in. It's not going to leave this intact and then just leave it. Okay. The algorithm views this as an inefficiency, similar to how we view a fair value gap. So you can literally just draw your box like this and just say that's a fair value gap because it's literally basically the same thing. So you reference 25%, halfway, and then obviously the high, okay? So let's go back down to the lower time frame chart. Okay, so similar to what I was just saying about the hourly wick, we now see that manifesting with the 15-minute, okay? So same logic goes for the 15-minute. Like, JR asked me, like, why would I not view this as a buying opportunity? So one subtle red flag that I view is this large 15-minute wick left behind. I know in this case it's likely to be worked back in and then continue higher. Okay, so understanding the power of wicks and how they operate, okay, will save you from getting stopped out in many situations, okay? And another thing to consider here, I know majority of you are not in my Discord and whatnot, but weekly objectives were actually hit in the New York session of Wednesday. So once my weekly objectives are hit, I'm really just not really hard pressed to take entries. You know what I mean? So it really needs to get me convicted to enter this marketplace and put my real money at risk. Okay, I'm not in here gambling demo accounts, not in here gambling evaluations. Okay, this is real money, and we're looking for real opportunities to take a trade setup. Rican. Oh, by the way, Dave, good to see you here, brother. No reason to chase. Yes, absolutely. Hourly order block hit at candle wick base. Well, let's go to the hourly chart and see what you're referencing here. Okay, so this down close candle, that's a bullish order block. We did touch that beautifully. So, I mean, at this point, I just look at the hourly chart, and I'm just not, like, especially on NASDAQ, like, we have wicks in both directions. Whenever you see that, you need to calm down. Okay, excitement is high, you stay out. Excitement begins to become low, then you can look to take a trade, okay? I'm not like these other live streamers that are live streaming and just have to put on a show. They have to take a trade because everyone's watching. I don't give a fuck about any of that, okay? I'm here. I have 3 specific models. If one of them perform, I'm in that shit. You're going to see my entry. You're going to see my stop loss, and you're going to see my take profit, okay? That's your signal, okay? If you're here looking for signals, that's cool. You can get signals, but I'm not going to say, okay, buy here, stop loss. No, you're going to see everything physically on my chart, okay? Now, 1-minute chart. You want to watch, number one, obviously this right here, and you would expect this fair value gap to hold, okay? Because once we consolidate within it, when you see us get up into a inversion gap and then consolidate, okay, the work's finished. If it's bullish and poised to go higher, it's going to displace right through that, okay? And another thing to consider, okay, goes back to that hourly wick, okay? So what you want to do is you take the low here. Here's the midpoint. You're going to notice we didn't quite reach the midpoint. I always tell you guys this every single day. Okay, the midpoint is not required. What you want to do is take midpoint to the high. At the very minimum, you need 25%. Okay, all I did here was take midpoint, measure the high. Here's 25%. And really what you want to look for is some type of body closure at or above the 25%. And once you see that, that's a key bullish signature, and you really want to look to engage on the lower time frames, okay? So with all that said, let's go ahead and go to the 15-minute chart. So same thing as the hourly, just, it's just a matter of scaling down your charts. You don't want to mark out every single wick on every time frame. That's just overkill. But okay, another thing I kind of want to advise you guys against is, especially NASDAQ, with these clean bodies down here. Okay, that's another little subtle red flag that would kind of turn me away. Dave, congrats on becoming a father. It's going to create a great strength that you didn't know you had. Be sure to incorporate working out in your routine. It'll help you down the road. Yes, absolutely. I don't know. I don't know about you guys, but working out, I absolutely, I think the mental benefits outweigh the physical. Whenever it comes to that, but yeah, I appreciate you. Definitely adds to the motivation and fire that was already lit inside me with trading, and I don't know. I'm just gonna continue to run it up and give this child everything that I can. All right, higher or lower by market close at 4 p.m. Honestly, like I'm just gonna say higher because, like, I know the draw is up here. Okay, so by market close, I think it's more likely to be above here. Okay, could I be wrong? If I'm wrong, then I'm just simply sideline. I'm not gonna take any trade. Okay, but yeah, by market close, I think it's more likely to trade up here. Okay. All right, so what did that say about this amount here? It's consolidating within it. If we see a large expansion above it, okay, there's no need for it to return back down here. So in that case, we can reasonably look for some type of entry to the upside, okay? Like most of the times I'll view this, I was like, okay, I'd actually like to see it retrace down in there. Like a lot of times I'll say that, especially with the clean bodies and the wick. I would view that as an opportunity for it to retrace back down into that and then look to continue the buy program. So whenever I see this, this is like a really good indicator for me to look at and, you know, save myself from getting stopped out, okay? Every time you watch one of my live streams, okay, whether it's Discord or here, okay, this probably will be my last one on YouTube, I'm not sure, but whatever the case is, you're going to get one or two things, okay? The first thing is you're going to get some fucking winning trades on the chart and you're going to take it with me. The second option is you're going to have a lot of low quality setups filtered out by me. I'm going to look at this and say, okay, most people are probably trying to take this. Not me, I'm filtering it out. Now, I understand that there's a lot of guys that trade the second chart, and there may be opportunities on the second chart that I can't see because I don't use the second chart. My model, my 3 specific models, okay, I teach them all the time, they're all derived from the 1 minute and the 5 minute chart, and it has made me money within the last 2.5 years. So why would I switch it up? There's no need for me to go down to the second chart just because it's a buzz thing going around on social media, whatever. I understand that I'm missing out on setups on the second chart. I do not care. That holds no bearing on me. Whenever you're making money consistently in these markets, those things hold no significance to you. Now, if you're not profitable, one of the key characteristics you're going to see within that person is, you know, they see everyone jumping on this trend and see someone trading something specific, it's popular and some new buzzword, and they hop on that, okay? If that's happening, you really think they have a working system? I don't think so, okay? If their system worked, they wouldn't try to switch it up whatsoever, all right? CR, you didn't miss anything, brother. We're still here, okay? I'm sorry if this isn't the fashion you wanted. You guys saw the guy in the comment. You guys saw in the comment above. He was like, I don't even know what the hell he said, but whatever. That's just clearly a guy that just wants signals off the bat. I actually kicked him from my Discord because I have zero tolerance for someone that has a gimme it now mindset. If you want that shit right now, first of all, you're lazy as fuck. You have no passion, and you're only in here for quick, cheap dopamine rushes. Okay, you're not actually here to learn, and I can't work or operate with people that are not here to learn. They're just there for drama, dopamine rushes, and that's just not what I'm here for. Okay. Now, if you want that, you can go watch an ICT stream, or you can go watch Patrick Whelan, but that's just not what you're going to get from me. All right, you're going to get precision, you're going to get trades, you're going to get all that, but you're not going to get the bullshit that people who like to milk the ad revenue look for, okay? All right, Dave, you're spot on. That's how you spot influencers. Yes, that's a good way to spot them. Like I don't know, like you'll see them. Like obviously, I make content. I'm on here. I'm helping people, whatnot. I'm giving out free value. I'm giving out value on my Discord. Um, but it's just like if they're truly profitable, why are they putting like so much emphasis and effort on their content? Like I just let me not go down that rabbit hole. By the way, let me just stop myself where I'm at. But anyway, looking at me speculating longs here, I'm not hard pressed to do it. Anyone that was hard pressed to do it, they're regretting it right now. They're not following their model. They're just following what they want to happen. What you want and what the markets are actually poised to do are two completely different things. And if you try to arm wrestle the markets, you are going to get humbled and your ass handed to you every single time. There's not going to be an exception. Okay, it's not going to be that one time that changes everything. If you do not follow the plan, you do not respect the risk, you do not respect what the markets truly want to do, and you only see your side and your perspective, and you force your will, trying to arm wrestle them, you're going to get humbled every single time. There could be a time where you get lucky, which is actually a terrible thing to happen for you, especially if you get lucky before you have that humbling experience. Because I've seen firsthand guys come in my group and they get these fast run ups right away, like, oh man, this feels good, and they make a lot of money, and it was luck, right? It was luck. And they use that, and that dopamine just spirals them into this thing, and they think that's going to happen every single time. They get into the markets, that first humbling experience comes, and now they're in the loser cycle, and all of a sudden, they lost a lot more money than they initially got lucky with and gained, okay? So don't be that guy. Understand that it's a process. Submit to that process. Submit to time. Don't be a part of the gimme it now crowd, because if you are, you're going to fucking fail. I promise you that. Okay? Submit to the process. Okay? It should be fun. Okay? But anyway, I told you the subtle red flag for me not to buy this thing right now was the clean bodies and the wick down here. We now see us trading back down into not only the levels right here, but also touching the regular trading hour gap once more. Okay? And once again, let me just show you that. So what you want to do when referencing regular trading hour gap, which is, you don't absolutely need it, but definitely adds a confluence. But anyway, you take the opening here. Here's the closure, previous settlement closing on the day. And then here is, this is a bearish candle, so the opening will be right here. That's the 9:30 opening. So you take the previous settlement day closing to the 9:30 opening, find your midpoint. This 90% of the time is a very, very precise price point to reference, okay? So let me take a look at ES here. Okay, beautiful. Not quite to the wicks, but as long as NASDAQ did it, I think that is just fine. So what I'm seeing now compared to this right here, I'm actually liking what I'm seeing a lot more, and potentially could be taking a long position here. Okay. Now, if I do take a trade for you guys live on stream, understand that if I lose and I get stopped out, that's purely the market makers targeting my stop loss. Okay. I didn't lose. They targeted my stop loss because they're watching my stream. All right. Anyway. Almost midpoint of the wick. I always tell you guys this when we're looking at wicks. Don't get confused. Okay. We view the midpoint of the wick. You reference it and understand that you don't need to require half of the wick. Like, to the tick, you do not need 50%. Okay, as long as it gets in its vicinity and gets in close proximity, okay, that's all that matters, okay? The wick has been, redelivered, and now, since it has done that, the market is now free to trade higher, okay? But all right, I'm definitely gonna pronounce his name wrong. I'm sorry, but Matej. Um, Okay, I'll answer that question in like 5 minutes, all right? So, what we have here, we had the wick worked in. We had the 5-minute rejection block on NASDAQ, okay, touching the regular trading arc at midpoint. And now I see, okay, we have a short-term run on stops. We reclaim this for value gap, okay, short-term discount priced in. Short-term sell stops taken for those that tried to rush into the move. And now we have displacement and a change in the state of delivery. So, in this case here, any retracement or touching this order block here, I'm absolutely long in that, and my take profits going right above here. Stop loss goes below the swing low. Why would I trust my stop loss below the swing low? Because it has taken liquidity, and this is an order block. Why is this an order block? Okay, you see so many guys saying, "Oh, order block," right? But they don't have any real logic as to why isn't an order block. There has to be a story supporting it. In this case here, this down close candle did what? Drove us down into a key level, okay, time-based imbalance low, and the sell stops, okay, and from there we get displacement, and it creates not one, but two fair value gaps. The markets are offering sell side, and that is now offsetted with buy side. That sensation right there, that is what we call the change in the state of delivery, okay? So if I do take a trade today, my one and only trade would be this retracement here, buying that, take profit above here, and I already told you guys stop loss below the order block, okay? Simple stuff. Now wait a minute, what happens if it doesn't come back down for us? What if it just guns straight up? I'm just not going to be a part of the move, okay? I'm just going to sit by and watch it. Alright, so remember that hourly wick I told you guys about? So we're just about midpoint within that. What did I tell you guys? 90% chance we see a wick like this. At least midpoint will be worked in. We have now touched midpoint, okay? And about 25% on NASDAQ. Now, just got a question. Why ES and not NASDAQ right now? Honestly, I just think ES looks cleaner. So you can trade either one. It's the same logic for ES and NASDAQ, but in my opinion, the market structure in ES just looks a great deal cleaner than the NASDAQ right now. And then we have a near-term draw right here, okay? So any type of institutional order flow below this candle's low right here, I would go ahead and buy that. Like I said, if it just guns straight up, then, you know, there's nothing for me to do, okay? Okay, I'm going to go fill up my water. I'll see you guys in 5 seconds. 10 seconds maybe. Okay, so it looks like it chose the route of just slamming higher. So, like I said, any touch, like even if it was just like a 1 minute candle wick, down into it, that would have been a trigger for me to get long. Now, let's look at the 5-minute chart. So I think 50% worked in, no, 25% worked in of this hourly wick on the NASDAQ after midpoint here was worked in. So we're pretty much just going from wick to wick here. But ultimately, it just comes down to is where is liquidity right now? Obviously, the larger pool of liquidity is higher. Okay, so in this case, I just view this as a discount wick to a premium wick, and beyond that, we're going to see it stretch past this and ultimately tag the buy side, right? So let's see if it gives us a retracement. Now, the logic behind sitting out this first opportunity is it doesn't exactly suit my model because I understand in this scenario, when we have like this type of low that's inefficient with the wick and the bodies, right? The clean bodies, there's liquidity below that, and then the wick is also inefficient. So whenever I see that, like a lot of times I know if I'm buying it like this, I'm opening myself up to the risk of being on the wrong side of SMT divergence. So I'm pretty much just expecting one of them to make a low in this situation and one of them to sit it out. But in this case, they both made that failure swing there, right? So at minimum, I want to see ES get down here. Oops. So in any other case, I'd be tempted to buy it on NQ, but I just simply would have to open my stop loss too wide. So does that fit my model? Does it fit my risk management plan? If the answer is no, you're not taking the trade. We're not gambling demo accounts. We're not gambling evaluation accounts. This is real money, and we're treating it like a business. Can you afford to risk this much at this moment, or does it fit your plan? Okay, it's all about the long-term perspective. Okay, one singular trade transaction, one singular trading day, that's not going to be the determining factor of how your career is going to pan out. Okay, as long as you're making your winners a great deal larger than your losses, which I've posted countless like examples of me doing that very thing live, you're going to do just fine. Okay. CR. Does change of state delivery have to close above for confirmation, or is it as soon as it passes by? So glad you just asked me that question, because that is one of the most common misconceptions. You hear a lot of influencers that just started trading like a year ago, and all of a sudden they have a course saying that you need to close above for it to be a change of the state of delivery. That cannot be further from the truth. If you know what you're doing, you know what the draw on liquidity is, and you have a real bias because you know what you're doing, you do not need a closure above this down close candle right here. So this, in this case here, this is our nearest term change of state delivery. So we'll use this as an example. This down close candle is formed. We have displacement above. As soon as one simple tick above the opening of this down close candle right here, that's your change of the state delivery. Okay? That's it. No closure above. You don't even need the wick high taken. As soon as we trade above the body, the opening, that is a change of the state delivery. Okay? And that's the truth. All right, notice how we're consolidating, so go ahead and take your range high. I'm assuming we're right around equilibrium with this consolidation. Okay, just above it. Now, another factor you also want to take in consideration here is obviously like one of the, classic graphs that you use maybe in school or whatnot from, back then or whatever. The bottom end, okay, that's our time. It's literally a clock. Like it's a hidden clock right in front of your eyes. We have time down here. We're measuring it by time. What time is it? When's our highest probability trade's going to take place? Obviously, that's within the kill zone, which is 8:30 to 11 a.m. And then we have macros within that. That's the time that we're utilizing. On the upper end, we have price. So we're utilizing time. I know. I know. Some people in here watching, they don't agree with that. Which I'm always the guy to like advocate differences. There's no need to, hang something over someone's head and like. There's plenty of ways to make money, especially within, these markets. Okay, it doesn't matter what you truly believe in. If your system makes you money, that is all that matters when it comes down to it. So there's some people that believe time is more important or price is more important. That's all right. They're making real fucking money. Why would I try to advise them against that or sway their opinion? They're making money. I'm making money utilizing time and then price. That's the beautiful thing in it. There's so many different approaches to these markets that can make you a great deal of money. And when it comes down to it, these markets, I truly believe they only reward those who, have the proper ethics, not a drop of greed in their heart, none of that stuff. So, yeah, Jower. I wish I could like that comment, but I can't. But yes, that's a true statement you just wrote there. So I'm assuming there's some type of 5-minute imbalance here. So yeah, right here. Now the only negative factor to what we're seeing in price here is it is 11:27 a.m. That's not particularly optimal time of day to be trading. We all know from time and experience that the lowest, honestly your lowest probability setups typically are going to come from outside of the kill zone and outside of a macro timing. Now you're probably going to hear me say that. I'm like, wait a minute, I seen you take trades with a lunch macro or within lunch and outside of kill zones. There's very specific exceptions. Okay, like the lunch macro from, let's see, yeah, we're getting ready to encroach on that in about 20 minutes. We have 11:50 to 12:10. Okay, that would be our classic lunch macro. And the only time I use the lunch macro is if we have an untapped pool of liquidity or some unfinished business from New York. Do we have that here? Yes, we do. Right up here. Okay. Beautiful. So we're running below these lows. Obvious clear highs right here. We're closing, which is very key here, at the low end of this time-based imbalance. Okay. Beautiful. Also, a good thing to note here is you're going to take the midpoint of this 5-minute imbalance here. Okay. Here's midpoint. Did we close beyond that? Well beyond that. Okay. Do I need that to be convicted in longs? No, but it adds to a nice confluence that suggests bullish signatures. Okay. Now, the real question here is, has dollar index reached our main objective? And just a little bit off there. Wow, so very, very close to that weekly low, which is obviously our main target. Okay, if you're feeling in any type of way, I very much so advise you to rewind the beginning of the stream, listen to what I said, and then look at your charts today, and you're going to notice that almost everything that I called out actually did manifest in the charts, okay? Not that, should be something that, I hold over your head or beat my chest with, because at the end of the day, predicting, calling out levels and then saying you're right, that's not making money, okay? It's one thing to call out levels, and it's another thing to call out levels and execute on them, right? Oh, man. All right, so same logic goes for here. These two consecutive down close candles, the same exact logic and narrative I gave for this change in state delivery. It's the same thing, okay? As soon as we see one tick above this opening here, that's your change in state delivery following the sell stop raid coming up out of an opposing key level, such as this 5-minute inefficiency, okay? So as soon as I see a tick above here, I would view that as a change in state delivery. So you're going to see me, if you ever see me live trade, okay, whether it's Discord or here, you're going to notice I'm very selective with my trades, but sometimes I'm actually quite aggressive when looking for my entries, and I'm, getting in right away with no hesitation. Those times whenever I'm not so inclined to do something is when time does not align, okay? Time is the first thing I'm measuring, and, when I'm looking at price, okay? And understanding, like, you don't have to be a genius to figure out when you should really be trading, okay? Just like, it's very, very obvious that there's going to be more volatility from 9:30 to 11 a.m., when the market's literally opening, and then we have an hour after the opening when they really want to do their due diligence. It's not something anyone discovered, okay? It's pretty obvious that, there's certain times where there's more volatility, which it's going to result in more setups than other times. So when are those times? Well, 11:30 to 1 p.m. typically it's kind of the oddball, and there isn't as much going on, okay? Especially if you had a market that, more so consolidated and didn't do too much in the New York session, okay? A lot of guys watching this stream today, they're finding out shit real quick. They're finding out what happens when you go against the plan, okay? And you try to be fueled from excitement. And that's good. I want people to fail the initial test when they watch me for the first time, because then it filters out those who actually want to do this, you know, in seriousness and actually want to learn. And it filters out the guys that just want signals right away and have every single characteristic of someone who's never going to be profitable, which is you're greedy, you want everything right now, you're lazy, all this stuff combined. Like, you're not going to just join a group and magically become profitable, okay? You have to put in the work alongside me or whoever else that you may be following, assuming that you're taking your learning serious, okay? And honestly, like, if you ask me who, like, I'm not gonna recommend anyone. You just have to understand that there's plenty of good options. There's a lot more bad ones, but nowadays we have a lot of guys and a lot of information out there. It's just a matter of who suits your personality the most. Okay, so where we're at now, 2024, that's just what it comes down to be honest. You're either gonna be caught up with a fraud, which is very, very likely if you fall victim to a lot of the bullshit that's out there nowadays, or you're gonna find some genuine traders and whoever just so happens to suit your personality. That's who you'll choose to trade alongside. Now, if I do not take a trade here in the AM session for you guys, will I do a PM session stream? Yes. With the weekly profile that was underway, I really thought I was going to take a trade with you guys, but um, I personally just did not see my model. So earlier, I almost forgot. Sorry, I'm coming back on it now. Matej. When did I start implementing my second model after being consistent with the first one? Well, I traded the first one for about 3 years. Okay, I obviously was seeing real results. That's what kept me in this game and making real money. And it wasn't up until I'd say 7 months ago I started implementing other models, and it's just because all it comes with is more experience. You're more seasoned and you're more comfortable within these markets, and you just see stuff and you're not surprised anymore. You're like, oh, okay, well, I saw that last Wednesday. I saw this like every week. Like, you find repeating phenomenons in price from showing up almost every single, or at least every single day that you can. Uh, being understanding that we all, some people may have a job outside of trading or whatever else the case is. As long as you show up in live price data almost every single day, eventually you're gonna really start picking up on repeating phenomenons in price. And that is what gives us the ultimate edge in these markets. If you don't know what repeats, you're just gambling. You're a mindless gambler just chasing after whatever, like a dog. Okay? You need to find what repeats. You find what repeats through experience and time. Obviously, watching streams like this will fast track that. But eventually, things will click. And that clicking moment is you finding, oh, wait a minute, I keep seeing this specific thing happen every single New York session from 10 to 11 a.m. That type of thing, okay? So once you hit that, you have arrived. Now, what's going to determine if you're going to make money from that, which repeats, is, are you patient? Are you greedy? Are you disciplined? Do you have disciplined habits outside of the charts? If you don't, well, you're not likely to be disciplined in the charts. So you think that, you can't follow a simple workout routine and be consistent with that. Who the hell told you you're going to be consistent in the markets if you can't do something as simple as that? It's not going to happen, okay? How many losses do I allow in one day/session? Do you stop after a win, and do you have a weekly, monthly target? Absolutely. 95%, 90% of the time, you'll see me stop after a win. Okay, I'm taking my profit. I don't give a shit. I'm grateful to have the money I can pull out anyway from a simple chart. I'm taking my money and leaving, not looking back. Okay, I'll come back for the PM session and look to take a trade. Like you guys saw me do that, what was it, Monday? Took a nice winner in the New York session, closed up, didn't look at the charts, came back 1:30 p.m. Kill zone, took another trade. That was 2 winners in a day. That's an exception because I'm taking trades in different sessions. But any given win within one session, after that I'm closing up the charts. There's no need for, I got my profit. I'm done. I don't need more. Okay. Whenever you actually write down your daily objectives, your weekly objectives, your monthly objectives, struggling to get my words out at this point. Been talking too long. I don't know how ICT talks for 5 hours straight. But anyway, write down your daily objectives, write down your weekly objectives, the monthly objectives, and your yearly objectives. If you do not have that and you're not aiming for anything, what are you doing? You don't have a cemented plan. You're expecting to be profitable. Once you hit those daily objectives that you have written down, which any profitable trader does, you stop. Once you hit your weekly objectives, which I did this week with the Discord members, I stopped. account was to the side. And now, okay, you're probably asking, wait a minute, you said you're going to take a trade here. Yes, that's on my side account, which I've actually already ran up almost 1% already in the last day. So obviously it's been a great week. Is it always like this? Is there always this many setups? For my model, not always, because the volatility isn't always as heightened as it is here today. But I'm loving it. I'm taking advantage of it. I literally just got a payout and posted that. So very, very good price action. But anyway, to answer the rest of your question, I kind of veered off there. How many losses do I allow in one day? 3. Okay. Any given session, I'm not taking any. I have a very specific rule. Every single stream, I'm like, okay, this is my third and final trade. 3 sessions or 3 trades in a session. That's more than enough for me. Okay. I don't take any more than 3. But anyway, okay, so we just rallied nicely off that 5-minute gap. And we're gunning for the highs, obviously. And remember I said us trading above the opening here. Okay, that right there is a change in the state of delivery. Okay, I'm not looking at the wick high. I don't care about that. Okay, the opening here, that is our classic change in state of delivery. So really what we've done, we consolidated within the time-based imbalance. Okay, we dropped down, took a short-term low, ramped up, changed the state of delivery. Coming back down right now, but I expect this to, continue to rip higher. So yeah, notice the low volatility that's in the chart right now. So like every time we ramp up here, like it just comes straight back down. So this isn't the type of environment I'd look to execute on. Now let's compare and contrast. All right, so look, let's say we displaced above and we came back down. Or sorry, we displaced significantly above, maybe matched this high, created the fair value gap, came back down, touched the opening, and an imbalance. That's a long scenario for me, but look what it did. It came up, ramped the whole way back down instantly. Okay, it's right back into the middle of the consolidation. And if you look at the 5-minute chart, 1 of 3 of my models, you're going to take the high to the low. And what you want to look for is the down close candle that is formed at or around equilibrium. Where is that? Right here. This right here will hold price. It will hold, specifically the opening. Absolutely, it will hold if this thing is poised to continue higher. Okay, so within this, I look for a reasonable expansion above, and then I look for a retracement into the order block. Now, us trading up and wicking down into it like that, that's not an entry point for me. Okay, I need to see not what I'm seeing here for me to actually trust this as a very specific thing, but if you take 3 losses in a day, what is your strategy for the next day? Tighten up and set a limit. No. Like, assuming that you already have a cemented plan, like, losses, like, they don't matter. Like, you can literally, like, all it comes down to is how you manage your risk. Like, if you're taking losses and then you come into the next day and all you're thinking about is the losses that you took the prior day and you just have to get that back and that's your mindset, you're most likely just going to lose more money. If you just come into the session and say, okay, well, yesterday didn't really go in my favor. Today I'm just going to do the same exact thing, look for my model, and follow the plan. If you approach it with that mindset, I mean, you're going to dig yourself out of that hole relatively quickly because really, losses are part of the journey. It's a part of the system, okay? It happens. It's just about how you manage following those losses. Typically, so let's say someone takes 3 losses in a day. Honestly, 90% of the people, that's going to spiral them, and assuming they have no discipline, that's just going to lead to them losing more and more money because they just want to. They just all they're thinking about is getting that loss back quick. I need a quick fix, and I need that motherfucking payout today, guys. I need to get up on social media and post it right now. There's no more time to wait, and as a result, they lose more money, and the humbling process begins. Okay. But anyway. Just back to the charts, like notice how hardline bullish I was and how many times it looked like a clear long low resistance setup was going to form, and I just filtered it out and like explained real time live why I'm not taking it. Okay. But anyway, baked pineapple. That's a name, isn't it? Yeah, I hope I answered that correctly. There nothing changes. Okay, you already have a cemented plan. You come into the next day doing the same exact thing. Okay, assuming that you have a model that actually is proven to work. Okay, and the way you're gonna prove that to yourself is, once again, I've said this several times in the stream. The greatest teacher's experience. You're gonna learn the most from showing up to live price data every single day. Obviously, back testing is very effective and very helpful. But in my opinion, I believe that watching live price data is the most beneficial thing and nothing beats it, okay? I mean, I can't wait for you guys to rewind back this stream, especially the beginning. Everything hits, and then, like, I don't know how many low quality setups I filtered out today, but, yeah, go ahead and hit that like button, all right? But anyway, just look at this here. It's like you don't. It's how do I word this? Like you'll go on my YouTube channel and you'll scroll and you'll see a lot of executions of like me buying this and it looks familiar, right? This looks like a buy model. However, everything that meets my plan and what gets me into actually taking a trade, it's very specific elements that mesh together, about 6 of them specifically, that all come together to have an A plus trading setup. If I don't accept A minus trade setups, okay, it has to be A plus. That's how I built my account. That's how I made all my money. I don't give a fuck what anyone else is doing or saying. That's how I'm trading, okay? But yeah, that's a whole nother rabbit hole I can go down. But just please, if you're making money, if you're profitable, you're watching this, don't switch it up. Don't go into a buzzword or like none of that bullshit, all right? Are there ranges, arrays that you carry over into the PM session from the AM one? Daily retracement, etc. I can usually come into the AM with daily bias, but the PM session always throws me for a loop. Yes. All of your key levels, as long as we're still trading through them from the AM session, you always want to extend them forward. So going into the PM session today, okay, this time-based imbalance, if we're still trading through this, I'm extending this out. I don't care how far we're in the PM session. I'm still referencing this. All of your levels must be extended. Important levels will be extended to the PM session, okay? As long as we're still trading through them, it's not supply and demand, right? That's a whole different thing. Can you make money trading supply and demand? Yes, sure. If you have the proper psychology and, you manage your risk effectively, of course. However, what I'm trading here is absolutely not supply and demand. So the levels that we're using, it's not random. We still extend them through. It doesn't matter how many times we're trading through them. Okay, as long as time aligns, we're in that PM kill zone, we're still trading through it. It's useful. And then like if the PM session throws you for a loop, like understand like there's one of two things that are going to take place. It's going to be a continuation from what AM has already done, which is if it was bullish, maybe like lunch lows classically will be formed in a consolidation. Like, so let's say this is the consolidation formed at lunch. We had a very aggressive AM session. So here's our AM session. Here's lunch, generating sell side. And then with the classic continuation, you'll see it maybe induce longs here to continue and then ultimately slam below the lunch lows. Okay. So you'll see this type of thing. And I mean, a lot of people are watching this like, oh, okay, well, this is a classic buy day. Yes, exactly. So this is one of two scenarios that typically play out in a high probability PM session. Okay. So a continuation or it'll be a reversal. So maybe we run out highs here. Okay. Boom. Comes back into a breaker or something like that. And then all of a sudden you have a PM session reversal. Okay. And 90% of PM session reversals, they come from what? Running out a key high that was formed in the AM session. So the best one you're going to find is definitely the opening range high in a bearish scenario. Now remember, this stuff all works if you're in tune with the daily time frame, okay? All this stuff on the lower time frames, they're only significant if we have, you don't always need daily bias, okay? I understand that, but at minimum, you want to reference the hourly chart and, have something framed from there, and then you drop down lower, okay? But yeah, hopefully that effectively answered your question. And I mean, the only way you're going to clear up that blur that you may have trading the PM session is, one, just simply don't trade it, because if you're profitable with the AM session, you really don't even need the PM. Or, two, just keep showing up and gaining experience, and eventually it'll click. But anyway, back to the charts here. 11:50 a.m. And before I go any further, let me make sure to plug in my MacBook here because it's quite low on the battery. All right. So, looking at the charts here, what exactly are we seeing take place right now? Well, honestly, I don't see any bullish signatures in price right now. Obviously, we were very convicted in previous daily high being taken, but honestly, like when I see this and it's not hit, like I'm not mad at that. Like that doesn't upset me because it's simply just going to be a high probability target for the next week, maybe even Monday. Okay, right off the bat. So, I mean, whenever you know what you're talking about and you understand what the price is likely to do on a macro scale, meaning the weekly or daily time frame chart, okay, it doesn't make a difference if it doesn't hit it on one given day, right? So, basically, what I'm saying is if previous daily high is not met, as well as this volume imbalance, I'm just going to be looking at this to be ran Monday. But once again, a key in filtering out low probability longs is whenever you see, like it wicks up and creates two clean bodies like this, like a lot of times you're going to see that reverted back to. Now, let's say we ran sell stops, spent a little time down here. Okay, body or wicks weren't too large, and then maybe we work in that small wick, and then from there we create a buy model. That is, what I prefer to take transactions on with my real account, okay? But, I mean, honestly, just one of those Fridays where, a lot of people are regretting trading it. If you met your weekly objectives and you're trying to force stuff on a Friday like this, that's you're going to have the worst feelings in the world going into the weekend, because what did you do? You weren't content with enough. You were greedy from the profits you already gained from the week. Even though you hit your weekly objectives, assuming that you have them, most people don't. You should have weekly objectives and stop when you hit them, okay? But yeah, just one of the most frustrating feelings in the world you're ever going to have is, you're up on the week, you're profitable, you made money, you're in the 1%, because 99% of people are not making money, okay? And if you made money, you're part of that 1% for the week, and then you come into Friday and you just think you just want to ride that wave. Let's keep it going, baby. Let's run it up. And all of a sudden, you're losing your profits from the week, and then you go into the weekend and maybe you're at break even or red, and you're just beating yourself up about it, and then that sets the stage for a negative week going into next Monday. So, and typically that leads into the loser cycle, and that's a whole nother rabbit hole. But just avoid being that guy, please. Okay. There's Fridays where it's poised to be very high probability, and then there's Fridays like this where it's very, very easily to lose equity if you force it over leverage, or you're just one of those guys that are fueled by dopamine and just have to trade everything that you see in the chart. Okay. So we'll scout out the 1150 to 1210 macro here. We'll see what takes place. Not expecting too much, and we'll keep this rolling to the PM session. All right. Matej, come on, brother. You should have been here in the beginning of the stream. I already answered this question. personal funds, AMP Live, and prop firms. Majority of my accounts are with Top Step, but I also do Apex. So Top Step, Apex, they work fine. But there you go. There's the 3 companies I trade with. So remember what I outlined for you guys several times in the stream here. Whenever you see this sensation here, typically yields back and forth price action, and when you see it wick up like this and 2 clean bodies, obviously yes, we can classify this as a sell side liquidity pool, but this is not what the market's going to draw to right now. Simply put, the bulk of the liquidity resides right below the bodies here. Okay. Do I use volume imbalances? Absolutely, yes. Now, one little gem I'll just throw you because you asked it. Your highest probability and most precise volume imbalances are going to come from the daily chart. So, one example. Okay, this right here, this is our primarily draw, which, like I said, if we don't hit it today, which we might not, it's going to gun for that Monday or Tuesday, all right? And then Friday, or sorry, I said Friday. NASDAQ, here's that volume imbalance. Okay, trade up to it here, wick off, trade up. Notice where the bodies are closing, right within it. And then we wick up here, touch it, trade off, okay? Your most precise volume imbalances are going to come from the daily chart. And they're very, very good for targeting purposes and using it as support and resistance as well. And do I recommend indice prop firms like Fivers, FTMO? I don't know anything about Fivers, to be honest, so I can't say anything. But FTMO, I would say. Does FTMO offer indices trading? I thought they were Forex, but FTMO is definitely a reputable company, so definitely trade through them if you're thinking about it. But anyway, back to what I was saying here. Bulk of the liquidity resides at these bodies here, right below it. So I forget how to take the wicks off the chart here, but if I could, I would. And, really you really want to place a lot more emphasis on bodies rather than wicks. I'm sure most of you already know this, but when you're looking at it at a liquidity standpoint, like technically us trading below bodies here, that is a run on liquidity. Okay? So without batting your head around it and repeating myself, you guys get the point. Let's go on to the 15-minute chart, or 5-minute chart, sorry. Okay, 1 minute's consolidating. Okay, slipping lower right here on ES. So while NASDAQ traded up to daily volume imbalance, ES did not. Would you view that as some sort of S&T divergence? No, I would not, and I'll tell you why. So the volume imbalance where I mapped out on NASDAQ right here, you look at that, and ES actually already delivered that volume imbalance, right? So relative strength on ES towards the all-time high buy side liquidity. Whenever you're bullish, like, you only try to look for a bearish S&T divergence if you're bearish and looking for lower prices. So if part of your plan for the day is looking for shorts, you're focusing on shorts, right? And then you can look for S&T as confluence. But if we're bullish, which in this case I am, I wouldn't be considering any type of bearish S&T. I just expected that to be ran through, right? But to answer your question on a deeper level, you can view it that being an S&T divergence. So let's say NASDAQ delivered this and ES was down here, did not deliver the S&T, or did not deliver the volume balance. Yes, that is an S&T divergence, okay? But anyway, we continue to slip lower here. Like I told you guys, we ran up into the midpoint of the wick and past that, which I was assuming that it was going to slip past it and reach that objective there, but ultimately trading down. And what are we doing once more? I mean, literally just me using simply just bodies and wicks. I'm able to filter out low quality setups, anticipate, back and forth price action before the fact. Would I be focusing on shorts with these wicks above and these clean bodies? Absolutely not. That does not fit my trading plan. So because you guys are watching me, that means I need to force something that's outside of my plan that has made me money in the past 3 years? I mean, come on, that's ridiculous. Listen, this right here is inefficient up here. If I'm trying to short it, I'm opening myself up to the 50-50 risk that, it might come back up there and then go lower, or I can just go lower. Okay, I'm not sitting here flipping coins. I'm trading very specific models that repeat over and over and over again, right? Man, oh man. ES getting ready to gun for the lows. It's going to be hard to find the very specific segment where I said this in the beginning of the stream, but if you guys remember and have been diligently paying attention, in the very beginning of the stream, I said, all right, guys, we're consolidating. We ran down below the sell side liquidity. I want to see it get up to previous daily high and this purple shaded area. Near-term target is up here. Okay, 10 a.m. delivered that in stunning fashion, slammed through it right away. I told you guys, okay, so what happens if it doesn't get up there? And what happens if it doesn't retrace and, show some type of buying setup and then get up there? I'm going to be on the sideline not taking a trade, okay? And that's I'm delivering exactly what I told you guys. If I was sitting here trying to force setups, I'd be going against everything that I said prior. And I would just simply be no better than any other guy out there that calls himself a trader that live streams, right? So, not much of a need for it to trade back to this fair value gap, but definitely watch this imbalance, because if it trades up into there, it's 90% chance to utilize that and slam to the low there. So we'll watch this, okay? So basically, why I'd be saying that is simply just, obviously we formed an intermittent term low, or intermittent term high, sorry, we displaced lower. We have now closed beyond midpoint of this bullish order block, and all these inefficiencies in here. With that many arrays being disregarded and bearish market structure beginning to form, so if we take our, here's our New York high to the low that was created, we trade up into the sweet spot, instantly displace lower, and then we disregard opposing arrays. Okay, this is a very, very clear run to this low here. Now, would I ever want to trade someone else's money? Probably not. No, I don't believe so. I will help them make money like I've done with everyone that's within my group, but yeah, I don't think I'd ever do that. Okay. No way. Wait, Dave, you're still in Robin's Cup? Respect, brother. I love to see that. Wait, you made 5% while in my stream. Beautiful. That's much appreciated. I look forward to seeing you next time I decide to go public here. Oh, you just started the account today. Nice. Well, hold on to that 5%. Appreciate it. Coming to the next week. And yeah, it's a great accomplishment because most people aren't even getting in and most people are in the red. So you, brother, are automatically a part of the small percentage that is profitable, especially in a large scale like that. But yeah, enjoy your day, brother. Enjoy your weekend. I'll see you. So like this 1 minute gap here, once we trade into that, what I'm looking at on NASDAQ is we have new week opening gap right here. Okay. So very likely to leave this open. So whenever I see buy side of the curve and then sell side of the curve delivered and it's this aggressive, a lot of times you'll see it leave gaps open and you wonder why it's not retracing up into it because, you know, both sides of delivery have been engaged with. And then we have new week opening gap down below. So all that's really left is it just gun down right here. Okay. So like new week opening gap acts as the magnet on price. And as long as it's within the IPTA data range, meaning, you know, it's just a fancy terminology for, you know, we look at 20 days prior, 40 days prior, and 60 trading days prior. As long as it is within, you know, that 60-day range, and you look back 60 days, as long as it's within that, we're still referencing the new week opening gap. Okay, so let's say this new week opening gap was derived from the 61 days ago. It's no longer, we don't need it. Okay, where are your highest probability levels going to come from? In the previous 20 days. So we have IPTA 20, IPTA 40, IPTA 60. Your highest probability levels are going to be in that 20-day range. Okay, so what all you're doing is, okay, you find your daily candle here. The previous 20 daily candles, your highest probable levels will come in from here. So that's why this breaker here would be so high probability. So I don't know. I'm going to listen to the people here. You guys let me know. Should I keep this rolling into the PM session or should I call it a successful day? By the way, it only take one of you saying something. The first person that comments, that's what I'm going with. And if there's no comment, then I'm just going to keep it rolling too. All right, 3 people have spoken. Or sorry, 4, 5. All right, you guys got it. I'm here for the PM kill zone. It is 12:08 p.m. So, I mean, when we were looking, I mean, I typically like kind of take a break and don't look at the lunch. But when we sit here and we analyze the lunch hour, maybe not today because of how much movement we had back and forth already as it is. A lot of times you'll look at the lunch session, you'll really key in on and see very obviously how they engineer and place in liquidity on both sides or one particular side. So, you know, the algorithm isn't taking a break, lunch break there. It's there for a very specific reason, and they use that as an excuse to engineer liquidity when volatility is lowered. Okay. All right, so you're seeing price hesitate a little bit, and I believe it's because we just reached down into the wicks and below the body here, okay, of the discount rejection block, and then we look at the 15-minute time frame and we re-delivered. Okay, 50% of the wick here. All right, and as we're doing that, we're also taking out a 15-minute low. What's below a 15-minute low? Short-term sell side liquidity. Okay, let's go to ES. So yeah, ES a little bit too close to the edge here. Definitely would like to see it ramp down below the low here. So, you know, the large wick up here, I think it's pretty obvious it's going to ramp up into this 5-minute imbalance and then utilize this 5-minute imbalance to send it below the lows. And then we also have this low. This is just some random low, right? No, it's not. Why is this low important? Well, if you're paying attention in the beginning of the stream, you always find the midnight opening, and then you find the most significant low that was formed after that midnight opening. In that case, that would be this low right here that ramped below the consolidation sell stops here, okay? And more specifically, to put a title on it, this will be our classic London low of the day. So that'll be our previous session low. So similar to how we view previous daily high, previous daily low. Okay, previous session low and high are definitely important levels to map on your chart when we're talking about liquidity. So from 2 to 5 a.m., that's our London kill zone. This was formed right in the middle of it. So this would be a time-based liquidity pool. What's my opinion on crypto? I do not place any significance on it personally. I don't like it. I never traded it. I know a lot of people, especially within my group, that take a liking in it, but I just personally, I don't know. I just don't really care for it. The futures markets will forever have my heart, all right? That's what made me the most money, and I'm sticking to it. And believe it or not, back in 2018-19, I used to trade. Barely knew what I was doing in 2018, 2019. I was Euro USD and British pound dollar. So a lot more manipulated of markets, and you know, you run into spreads and slippage when you're trading Forex. So not that it's a terrible thing to trade. It's the second best thing to trade other than futures, but if you're trading Forex, I would advise you to look into futures a little bit because it's a lot easier to read. So notice how it traded up just into the very high end. So look how it, what I'm going to show you here is subjective, and it only matters if you actually have a real model surrounding this. But when you have a 1 minute imbalance here, and then you have these stacked up highs, it starts creating these 1 minute clean highs. I mean, that's just a dead giveaway that's going to retrace into that fair value gap. So whenever you see this, you might as well just book it and just wait for it to trade into the gap. Okay, it just adds the probabilities that it'll retrace into it. All right, so once you see that, obviously, like I said, I would look to see it utilize this as institutional order flow and then send us lower down here in the new week opening gap. Okay. Now we do have a little bit of S&T divergence here. ES failed to get above these 1 minute highs and trading to the imbalance here where we all see that NASDAQ did. So that would be a small subtle add-on to what we've already, you know, anticipated to trade lower. And I'm just going to wait for it to trade a new week opening gap. And what time is it? It's 12:14 p.m. So notice how, let me just map it out here. Now, why didn't I personally place a trade on this? Just because I don't particularly care for, trading this right now. Just in terms of, not enough confluence is coming together for my model. But we have 1150 to 1210. Okay. Now, looking in this time window, what has taken place? Well, obviously, with the benefit of hindsight, we can see that majority of the down movement towards new week opening gap has occurred within the macro. The work has already been, placed in prior going into the macro. We deliver buy stops here. We have an optimal trade entry relative to the New York high and low. Okay, so session highs to session low. Here's our range. We ramp up into buy side liquidity, sweet spot above the 62%. And then from there, we have displacement to the downside. Okay, as soon as we get into the macro, all we do is down, trade down, and then we're outside of the macro and looking for the move to be completed down here. Okay. How do you confirm an SMT? Well, you simply just, assuming that you at least have one simple model. So you identify your model, you see it take place, and then you see, okay, so we have, right here, we have ES taking the high. Okay, so ES slams above the high. And let's say in this situation, we have a very, very clear daily bias. So we're already bearish. We're already looking for sells. Okay, and at this point, it ramps up into a premium. We take a high, and then we go to NASDAQ. Or sorry, we go to ES, and we see that it fails to take that high. You already have a bearish narrative, right, from the higher time frame, assuming. Once we have this sensation take place, we have that crack in correlation. So ES fails to take out the high. There's your SMT. But what do you need to consider here? What time of day is it? Is it the optimal time of day aligning with your daily narrative? And in this case, it would be. So if you're bearish here, right, you're looking for sells. You're bearish on the daily time frame. We see that the high was taken on NASDAQ. This high failed to take out. We now have displacement to the downside. And then from there, we just sell off, okay? So it's really not something you should overcomplicate. It's just simply waiting for an high being taken out and then the other asset failing to take it out. So let's go look at Dow, okay? Dow at that time also did not take out the high. So honestly, your highest probability SMT divergences is when one of the assets do opposite. So in this case, we have both Dow and ES failing to take out the high. And that crack in correlation comes from NASDAQ taking out the high. Okay, so if one of the assets are, the oddball, and then you begin to see bearish displacement from the SMT, which is key to confirming an SMT divergence, right? We have the displacement following that. We have this gap close below, this gap close below, and we have this swing low ran. Okay, so all that stuff is suggesting bearish price action following an SMT divergence. So that would be something I'd outlook. Now, was I bearish on the higher time frame? Did that fit my narrative? No. So I wouldn't view this as something that would, an SMT for my model, right? It could be for yours. And yes, absolutely, Zek. Your highest probability SMTs will form in the macro timings, okay? Don't take my word for it. Go look for it for yourself. So 12:19 p.m. The next time window I would look for actually something significant to take place is 12:50 to 1:10. All right, so um, honestly, I don't think I've traded that macro in quite some time, but definitely from time to time when there's unfinished business from the New York session, it does pan out well. Look how close we got to the low here and then traded off. Engineering more sell side liquidity. That's all that's taking place here. Okay, it's not gonna get this close just to trade away from it. All right. So let's look at dollar index. Let's see if we took that weekly low. I'm sure we did. Oh wow. Looks like we missed it by just a little bit. So we still have the draw lower on dollar index. Now remember, dollar index typically doesn't have as much volume as the AM session going into the PM. So definitely place a lot more significance on the dollar index in the AM session rather than the PM. There we go. All right, so DXY, I believe this is just engineering more sell stops for later on. Like I said, not much volatility usually in the PM, especially on a Friday. So could just come up off of this, consolidate, and then Monday attack it, right? I do believe dollar wants to revert above the buy stops here because all we've been doing all session is just slamming lower. And then we come into here, lunchtime, and then maybe into the PM. And you ask yourself, where's the liquidity? Obviously, it's going to be above these highs here with trailed stop losses from those who have been making money. Okay, that's the number one question you want to ask yourself when you're trying to, find your way through these markets in any given session: is where is the liquidity right now? Who has been making the most money? Okay, and whoever's been making the most money, let's say it's the short sellers, you're likely going to be taking some type of long setup if you're trading, with how I trade. And 90% of my trades is literally just, going against opposing liquidity. So, yeah. Listen, guys, this live stream right here, this is the most you're going to see me, with this much time and, unbothered. So either today or tomorrow, I will be first time father. So definitely will not be able to sit on a stream this long uninterrupted, at least for the amount of time we've been here today. But anyway, completely normal consolidation here. Failed to get to the 1 minute gap here on ES, like we already said, and then obviously NASDAQ gets up there, trades lower. I would just anticipate it to run through these down close candles and finally get to new week opening gap, because once again you think of this like a magnet, so it's pulling price. So if we know this acts as a magnet and we know that new week opening gap yields fair value to larger funds, we're going to expect it to trade down into it if it's this close to it, especially with a sell side liquidity low here. So this would be our New York session low. Notice like the pinpoint perfect precision at the low end here. So it trades down, trades into a short-term low here, right? And then from there, obviously displays is higher. So like pinpoint reverses right at new week opening gap because fair value has been yielded to the larger fund. So from there, they're free to do whatever they want. In this case, it runs up, met with some resistance here, but ultimately trades up into the optimal trade entry levels right here. Okay. So any minute now, we should see it trade down to new week opening gap. And I would like to see that, and then interested what I'd be able to do with this going into the PM session. So what time is it? Yeah, just about 12:30 p.m. So 30 more minutes, we'll start to take things a little more serious for the PM session. We still have a tiny bit of today's regular trading hour gap sitting inside the new week opening gap. Well, let me take a look at that because I haven't referenced that in quite some time. Here's the closure. Yes, indeed we do. So we have this pocket right here. So right below that. So yeah, I'm glad you mentioned that because that would obviously be another draw with new week opening gap and the low. Yeah, let's take a look at it on ES as well. So once again, like we open, here's the previous settlement daily closing here, and then here's the opening at 9:30. So that's when the market's open, right? We just traded down to midpoint right now. And then we have this entire lower end residing here. So being met with some resistance, but ultimately still drawn towards the same thing I've been saying. Okay. So I really, really want you guys to remember something. You're probably asking, okay, you wanted to trade a new week opening gap, all this stuff. So why didn't you say this beforehand and actually take the trade? I already told you guys real time. These clean bodies up here and wicks left behind like this. That's never, I never look at that and say, okay, yeah, I really want to trade in this environment. 9 times out of 10, I'm just going to get stopped out. So I just really don't engage when I see something like this. Okay, so if I'm looking for shorts, I would need to see this a little bit more cleaned up, okay? So that's the only thing that turned me away here. But luckily for me, this is already a time window that I do not trade, which is 12 to 1 p.m. typically, and waiting on that kill zone. Now, yesterday, I said I typically don't trade it, but remember, yesterday, for those of you in my Discord, you know that I took a long with the lunch macro. And it's funny that I hit daily objectives yesterday on longs whenever we were primarily bearish, right? So, basically, wasn't a part of the sell-off, right? But it ramps below the sell side liquidity, so we now have a key level delivered, right? So we have sell stops taken from the marketplace. We have a discount relative to this low, the high priced in. So we have a discount, 62% retracement, and sell stops taken. And then real time, I was looking at this like, oh, wait a minute. We have not one, but two body closures right at 62% right here. Following that, I drop down to the 1 minute chart. Okay, and I identify where is the liquidity. Who has been making money? Obviously, it has been the short sellers. So once we come into the macro here, which obviously the macro begins to move, okay, here is 1150, and then here's 1210. Extend that forward. What happens within this time window? It begins the move. We've traded down into key levels going into the macro. We drop down, short-term low taken. Let me zoom in. I guess I have a new trading replay. Oh, here we go. We drop down, take a short-term low. We form an intermittent term low heading into the macro. And then as soon as it kicks in, it creates a swing low, and then we displace higher. We have a market structure shift above this swing high. And I understand that there's buy-side liquidity resting above here from those that are trailing their stops that have been making money from up here. Okay, and the only reason why I'm considering this long with the macro is because we delivered such a key level of liquidity that I just showed you guys. So our short-term dealing range is you find the most significant high that was created before majority of the aggressive down move has taken place. So you take this high to the low. Here's your midpoint. Right above midpoint, we have these relatively equal highs. This makes these a great deal more high probability as a draw on liquidity because it's right above equilibrium here, okay? So when we have that, okay, it drops down. We have ourselves what? You just find any array, doesn't matter what it is, as long as it fits your risk management plan. Okay, drops down into this inversion gap. Now, if you reference NASDAQ, I'm not going to do it now, but you're going to see that there was an S&T formed, and NASDAQ actually swept the low here, while ES failed to do so. Once I saw that, and then I saw it wick down one more time to the low end of the bounce, I'm longing that, and simply just aiming for the buy stops above here, and then we have this large fair value gap above it, which also adds to the probabilities of this being ran, because we have an imbalance and efficiency above it. Okay, so that's just the basic rundown on that. So that was one exception to me trading the lunch macro. All right, so we have that low engage. Let's see if we got new week opening gap on NASDAQ. Not quite. Yeah, very close to it. Low not engaged on NASDAQ. What does that tell you? Well, that we're going to continue lower. But honestly, like, I'm looking at the hourly chart. I honestly can't frame any type of bullish scenario here, okay? To me, it just looks like it's going to continue and actually potentially reach previous daily low right here, okay? So when you see it wick up like this, aggressively ramp off, okay, works in the wick, and balance over here, creates a swing high. It's trading lower, okay, unless, like, the only exception is if we trade down to new week opening gap again, take the low, okay, maybe new day opening gap even right here, okay, see that? So the small volume imbalance, not just any random volume imbalance, it's important because it holds fair value. Not really needing it today because, I mean, it's right within new week opening gap. So this is really the only levels I need. But as of right now, like, I'm thinking about what I might be doing in the PM session, and I just I can't really frame a long scenario unless I really see a strong reaction off of this low and new day opening gap. So we did engage the New York low here. Okay, this is our New York session low. We did take that, and we did not take it on NASDAQ now that I'm looking at it. So obviously you can deem that as an SMT. What I'm looking at on the 1 minute chart here is how many times we drove down and took the lows. So I understand that like most times when you see this sensation taking place, like especially with this internal low being ran, it drops down once, taking sell side, drops down a second time, taking sell side, drops down a third time, taking sell side, runs into the bodies here. Technically, this low really does not need to be taken out whenever you see a 3 drives pattern because sell stops have already been continuously engaged. Okay, so if it's poised to, begin a buy program following that, then that's what it's going to do with this 3 drives pattern. So after the 3 drives, it definitely would have been preferred to see it touch the week over the gap, but it failed to get there. We see this displacement above. Here's our breaker right here, and it's respecting that and trading higher up into these clean highs. And then we have the 50-minute fair value gap right here. So if it slips beyond this 15-minute imbalance, I think this could be a catalyst going to the PM session to have some type of continuation higher. And then really just attack these clean bodies up here and then the wicks. Okay. Very inefficient. So 1238, I already told you guys I'm not going to consider, pushing any type of buttons until we reach 1250, all right? But for now, let's study and watch what it does now that it's engaging this breaker here. So like I already explained to you guys, okay, we have a 3 drives pattern down into London low here. Okay, we have taken the low, and then NASDAQ has failed to do so thus far. Me trying to buy this breaker here, it's a little bit of a coin toss just because opening myself up to number one, it's not the optimal time of day. Number two, we have the new week opening gap down here. So if I'm really going to buy and look to target the, wicks that I showed you on the hourly chart, I would need to see it slip past this 15-minute imbalance. Okay. So I'm not convinced by any bullish run. I would just look at this as retouching the 15-minute fair value gap and then drawing back into this magnet. So we'll watch this setup fail, and we'll understand that it failed because of the logic I just gave you, okay? Now, if you see it actually pan out, then on the flip side, you would just, you just have to understand that even if it pans out, it doesn't matter because you always want to stick to your plan that has made you profitable in the first place. Consistently profitable. I'm not talking about one, lucky flash in the pan type of thing. If you're consistently profitable, stick to what has made you profitable. Do not go outside of that. Once you start veering outside of that, you begin opening yourself up to risks that you have not opened yourself up to while you've been profitable, right? So, for me personally, 1238 or 1240, I'm just not really interested in taking a trade, especially being that close to the macro and within the lunch time zone. And then also everything that I just explained on the charts with the 50-50 nature, okay? Look how close we got to London low, though. Like, if I had my take profit there, you know how frustrating that would be? Like how it gets right to it and just doesn't pierce below it. So we now have a body beginning to stay beyond the breaker here, okay? So with it disregarding the breaker and now it closing, that's automatically canceled out. And like I already told you guys, this is what we expected before the fact. And, you know, we have this London low here and then obviously new week opening gap down here. So like I said, things definitely stacking up more so bearish. But remember, like I've kind of moved away sort of from, so compare and contrast what we were doing earlier to now. Looking at price now, I just don't place as much significance on it until we reach the kill zone of, PM. So that's just how it is. The probabilities are a lot higher whenever we're within those kill zones and macros. And, obviously we're not within that right now. And typically what we see within this hour is just setting the stage for, the PM session, right? So we have now ran the relative equal lows. Okay, we have touched new week opening gap as well as, I'm sure, new day opening gap. Okay, right there. Beautiful. And ES. Okay, we just pierced London low now. So very much a discount of the range in that sweet spot. Now what I'm thinking here is with NASDAQ showing relative strength, we definitely could see it pierce below this low. And in that case, going into the kill zone, we look for some type of SMT. So not that, we need that. That would just be a confluence and, beginning of a buy program into the PM session, right? All right, so this large 1 minute gap created, watch that, and then we have the new week opening gap high with that fair value gap, okay? So, looking at how hard we displaced matching this high here, obviously this is more than likely we're going to see repricing above here going into next week. So, just engineering more liquidity dropping down, maybe entertaining down here. And then from there, next week we'll look for some type of bullishness to continue above here. And yeah, NASDAQ slipping to the low now. New day opening gap. Yeah, NASDAQ already reached new day opening gap. And then, ES obviously would draw to that like a magnet as well if it's poised to continue bearish. I don't even need to go look at other streams, and I don't need to look at other streams. I don't need to look at any other executions from anyone else today. I already know, like, a great deal of money was lost in this New York session, and we navigated through this beautifully and really filtered out a lot of low quality stuff that a lot of guys may have tried to engage with and, obviously lose equity as a result. So far, body's remaining at the new week opening gap low here. And we'll continue to monitor this. And things become a little bit more significant now because we are heading into that 1250 macro. So with that, being in the back of our minds, I'm able to start taking things a bit more serious in terms of, taking an entry point. Yes, please. Thank you.
It's always double decks. I'm sorry, double deck. No? No? You want some of this white sauce on it?
Mm-hmm. Yes, please.
An onion?
Yes, please.
Yeah.
Thank you.
Also, do you want it on the burger bun or just the regular slices?
Regular, yeah.
Probably Italian or this one.
No.
This one?
Yeah. Thank you. So yeah, I mean, just beautiful alignment of new day opening gap and new week opening gap, specific price point being repriced to. Dropping down to the 15-minute. Okay, I want to see if we can get above the opening of this down close candle formation. And obviously, I'll deem that as a change of state delivery after, obviously taking sell side liquidity and looking to see if I can frame something to the upside from new day opening gap / new week opening gap. Okay, ES looking good. Okay, perfect. So remember, similar to what I was saying earlier, you do not need any type of closure above here. As soon as we trade one tick above the opening of these two consecutive down close candles, that is immediately deemed as a change of the state delivery. So what we're going to do here is we're going to go ahead and map out this gap here, okay? And we're going to really watch what it does now that it's working on the heels of it at the high end, okay? And remember, this black line, this here was actually the midpoint of the regular trade nerve gap, something that we're looking at when we were dropping into it here and here. And we're going to go ahead and delete that because it's no longer needed. It's already been delivered, so let me take this off. Ayub, I'm very. I'll just call you HM, alright? Because I'm pretty sure I'm saying that wrong. But sometimes it's one, sometimes it's multiple. Okay, how you're gonna, be able to tell the difference is just basically just gaining experience and learning. In this case, 5-minute time frame, these two consecutive down close candles. We know that both of these is one bearish order block because both of these candles is what took us down into the London low, and then you go up to the 15-minute time frame, and all of a sudden, those two down close candles turn into one. Okay, so whenever you see that, you know that the two consecutives makes up one order block. Okay, as opposed to, so let's say we have these two consecutives here, these two 5-minute candles, and then we go up a time frame, and it doesn't turn into one. Okay, then it's just you're gonna use just this candle right here. Okay. So as soon as we trade above the opening here, I classify that as a change in state delivery. So I would be looking at this as a buying opportunity. Honestly, I was looking to see if it'd drop into a gap, and I was going to buy that. But with us, waiting for that change in state delivery, and also forming this down close candle, I know that we're likely to hold this down close candle prior to running the highs up here. Okay. Very basic understanding of institutional order flow. As soon as you see this down close candle formed, okay, if it's going to be a low resistance environment, meaning it just goes straight up for the highs without any trouble, it'll hold that down close candle that it forms. Okay. Question on the daily chart. There are two fair value gaps. Is the lower one considered the breakaway gap? Well, real quick, let me look at that for you. So, I'm assuming you're talking about this and this. But anyway, to answer your question, I mean, the point of the matter is the weekly profile and the overall draw on liquidity. We know that the liquidity rests up here. We know that the main targets are higher. The bias is bullish on the daily time frame. In that case, look how extended we've been. Look how aggressive we've been to the upside. Okay, this one retracement here should and usually is more than enough to kick this thing back into a buy program until we reach higher targets. So this decline here, that sweeps out these 2 daily lows, trades into that first fair value gap, and also trading into a breaker here. So when we have a fair value gap coupled with a breaker like this, not much of a need to trade down into this one. I'd actually prefer to see this stay open if we're gonna, remain heavy to the upside. Okay. Another factor to consider is this range is bounced. So we offered sell side of the curve, buy side of the curve, buy side of the curve again, and then when we drop back down into it, we don't really want to see it entertain the low end. We're really at the midpoint of that, and want to see that held. Oh, thank you. Appreciate it. All right, guys. Fast forward. Took a minute off, and we see we had that change of the state delivery. Okay, so we closed above this opposing up close candle. So as soon as we see this up close candle disregarded, the body, automatically we deem that as a change in order flow. So order flow shifts bullish once this up close candle is upset. So we see that we have a market structure shift, but more specifically and more importantly, it's a change of state delivery above the opening of these two consecutives. Okay, so from there, okay, perfect. Okay, so what I'm going to do here is I'm going to take these two up close candles, and that will be classified as our breaker. Okay, extend that through. Okay, so we're trading back down into that after the change of the state of delivery. Okay. And I really want to see this thing, see higher pricing up into these wicks here. Beautiful. So I want to see at least midpoint of this gap here. So, I mean, looking at it from a top-down approach, very aggressive wicking off of fair value down here. Obviously, a discount has been priced in. We've taken New York sell stops. Okay. We're now having displacement to the upside off of these levels, and then retracing back down to a breaker. Now, the next thing to consider is what time is it? It is just about 1 p.m. Okay, so we're in that macro. All right, I've seen enough. Let's see what it does once it breaks this 1 minute candle here. I really just want to see a swing low formed at this breaker here, because with it being 1 p.m. ahead of the kill zone, like once again, it just goes back to knowing your times, right? So remember, we also did trade back up into, we reclaimed this 15-minute gap here. Notice how the bodies are staying below that. Particularly don't like that. So it's already just disregarded the breaker. So this entire idea here will just turn me away from that because we should hold the breaker, okay? And we just disregarded it on NASDAQ. So once again, like if we were continue bullish, like I showed you on the daily time frame, not much of a need to retrace in this range. We have sell side of the curve and buy side of the curve. Okay, if it really, would give it attention down here, the probabilities for it to continue higher is not high whatsoever. But in this case, as long as the fair value gap holds here, and then this bullish order block, obviously things are okay for bullishness. So I like how we're wicking back down to the opening of the consecutive order block right there. So that's actually nice to see. And with that, I think that will allow me to enter the marketplace here. So I would be buying at 23. And I'd have to open my stop loss a little bit wider than I'd want on ES. So I think I'm going to go ahead and buy the micros here. Okay. So I'll buy the micros. Stop stop goes below. Buy limit goes above. And I'm going to buy one more here. Just so I can have a partial. Okay, so for me widening my stop loss like this is only permissible if I'm trading, lower size like this, okay? So first, profit's going to be taken off here at around 60 handles. And then I'll hold a runner up there. So this will be trade number 1 of the live stream. And then from here, we'll speculate and see if we can get anything, or if anything would form to entice me to enter the marketplace with the PM kill zone, okay? So let's see here. So I think first, profit objectives taken off around 16, almost 50 handles is very reasonable. So I would do that and then obviously hold this runner. So what I really was looking at and liked here was the change of state delivery and then wicking back down into the opening there. I would view that as accumulation of longs right there. So I'd be buying it on that. And then targeting these 2 consecutive up close candles up here with the fair value gap, okay? And remember, we sized down here because, we are prior to the kill zone, and then also just with me having to widen my stop loss more than I would particularly want to, that's why you would see me size down in this scenario here, okay? Did you know you can press 15 or 1 in your keyboard to switch to that time frame? Wait a minute. Oh wait, yeah, no, actually I did know that. Yeah. I don't know, I just use I just do it this way. This is what I do. But anyway, so like on the contrary, on the off chance that we take a loss here, right? What happens if we see a body below the breaker? Obviously, I'm not going to hold on to the transaction at that point. I'll cut my, cut things short and then, leave it at that. So if we see any type of body below the breaker, that's the only thing that would, make me want to close the trade. But I mean, just looking at like, regardless of the outcome here, like, it's just funny, like an outside speculator that may come in and see like me trade for the first time, like the underlying context is on my main account, I hit weekly objectives in the first 2.5 days of the week, right? Um, Weekly objectives on the main account was hit. What do I do with that? Put the account away. The key is locked. I'm not returning. I'm not taking any more transactions on that account. Okay, if you do that and you say this is your weekly objective and you hit it and then you open that account back up from to risk those profits, that's just idiotic. Okay, be content. Take the profits. Put the account away. What you see me doing here is trading one of my side accounts. Okay, so whenever you see me trading after I say I hit weekly objectives like I posted on Twitter, that's not me opening that account back up. Okay, that account's gone. It's not being touched till Monday. Okay. Now, maybe you're wondering, I'm not sure. Looking at it here, let me see. Maybe you're wondering, okay, why are you not trading the regular NASDAQ? Well, if I were to be buying it here, that would be 19,677, right? And then on the downside, where my stop loss is, okay, that is 47.57. That is almost a 35 handle stop loss, okay? I'm never opening my stop loss up that wide on a full contract, okay? That's idiotic, and I'm never going to risk more than 1% of my account. It's not happening, okay? Regardless of how many times my model repeats and shows its hand, it's just not going to happen, okay? You're not going to see me risking more than 1% of my account. I stayed true to that. That's what's made me money over the years, and that's it. I'm sticking to it. Top videos. Welcome, brother. What's up, Danny? How you doing? I'm assuming it's pronounced Danny, right? So like I said, everything remains the same and stagnant on this trade here, but the only thing that would, on the opposing end would make me close this transaction is if we see any type of body below the breaker. So I wouldn't leave my stop loss down here and, hold on to a losing trade, because at that point that's just egotistical, right? So if you're seeing red flags going against you, like, you're not going to just hold on to the trade. Like, nope, I'm right. This has to pan out. I'm streaming. It's got to be the first trade I take has to be a winner. Uh, Brian put the link in there for you guys. I thought you guys would see it, but yeah, first time in a long time streaming here on YouTube. Probably be the last time, but yeah. I wonder how many people are watching the stream right now just wanting so badly for this to go against me and to lose a trade. It could happen. There's always the risk that you open yourself up to when you trade these markets. But, Market makers could always come in here and target my stop loss. You never know. Now, it is spending a little bit too much time on this breaker, but, like I said, consolidations within arrays are typically normal, and, we'll wait for some type of expansion. All right, someone just said there's news at 1:45. Let me check that out. Oh, okay. Well, it's yellow folder. I don't really care about that. Yeah, it's yellow folder news. I'm not worried about it. Okay. So yeah, spent way too much time in the breaker, and then it's displacing to the downside. And like I said, this down close candle should hold. So really, I should just hold right here. Okay. So risk to reward is very favorable at this point, but I just don't see this stacking up in my favor just with how much time we're spending in the breaker. I need to see it leave it quickly. Yeah, I don't. Yellow news isn't really. Nope. Only if it's red folder, then I'll give it some significance. But other than that, I don't really care about it. Yes, top videos there. That is the benefit in reaching your weekly profit objectives and uh, putting that account away. Okay. So from yesterday, basically to give you an outlook, like yesterday we took 2 trades, and that brought us to on the side account. Okay, $50,000 PA funded. That's a side account I'm currently within, and that is up $500. So that would be why can I not do this? It's concerning I can't do this math. Okay, yes. So just about 1%. There you go. And yeah, my main account, I think I'm gonna withdraw some of the profits here pretty soon, but that'll be seen probably next week. Like it is a little bit laughable when I see like these questions. Like I understand like they're new and stuff. Like I probably was asking the same stuff like back in 2018, whatever. But like first of all, most of your questions are going to be answered just with gaining experience. That's all. Like I don't know how to word this. Like it's just like you're how do you know this will fail, and how do you know this will work, and how do you know it won't fail and it'll hold? Like the real answer to that through experience is you don't absolutely know with 100% certainty every single time that it's going to work, right? And that's why we have stop losses. That's why we have reasonable risk management. And that's why we make sure absolutely that the winners are a great deal larger than the losses, right? So if you do that, it like don't want to sound repetitive and like an open book, but you're by default going to become profitable even through, minor setbacks and losses, right? Now, if you're sitting here over leveraged, so let's say you take a loss and you want to get that back right away and be back in profit, and all of a sudden you scale up after a loss, well then that's on you. That's your psychological side, and you being impulsive and not disciplined, right? So you're obviously not going to be profitable if you're taking a loss and then you react to the loss terribly and go away from the plan. Okay, you have to write this stuff down. You have to write down all the statistics and really just have a solid set in stone plan, that suits a reasonable risk management. So ES, obviously a bit stronger here, was able to actually get above the high. Whereas NASDAQ, we're still waiting on that, but it should any minute now. And, oh, almost. Did it get above it? So, I mean, that's about 16 handles in profit right there. It looks so tiny, right? But that is 16 handles. Okay. So here, 8.5. Okay. Just a tick above the high there. Okay, and I'm just gonna, yeah, I'm really looking at the opening of this up close candle here. So that's really where I'm taking off majority of the position. All right, so that is about 15. That's about 20 handles there. Honestly, it'd be reasonable to take partial. So, like, I don't even need to go for this much. I'm just gonna go right for the inefficiency high. Okay, so I'll take first objectives off there, and then runner is gonna be held for this high up here. So I'll do right there. I mean, obviously not as much volatility as I'd want, but, Price action looking like a dead snake. It is a little lackluster, isn't it? So we just worked in a little bit upper of the wick on the hourly time frame. So remember the main target was these opposing up close candles and then bounce. Really looking to see if we can get the volatility to get up there, which it should. So working on the heels of the high end of the breaker here. Okay. So in this case, ES looks like would have been a better long, but obviously we're in Nasdaq, so it doesn't really matter. But so from the entry on ES, it would have been 522.5, 530. So it's about 9 handles on ES, which is I think pretty respectable. Okay. So guys, no matter what the market's doing, like it's in profit, out of profit, like whatever the case is, just soak in like how like the calm environment right now. Nothing when nothing's euphoric or on the other end like oh fuck dude like I'm losing, and it's just like once you get to a certain point where you pull real money from the markets, you've done it consistently. It's just it's another transaction. You understand that one singular winning trade doesn't equate to actual, real profitability. It's obviously a series of consistency of, winning trades and mitigating through the losses as well. Okay. Quintamilius, beautiful. If you're using multiple contracts, please take a partial on ES. Okay, especially ES because it traded a bit higher. But yeah, thank you for saying it's been an amazing stream. I'm glad I could turn some heads. Okay. So stop gets raised and risk is significantly reduced. So not risking much in this case scenario. And, we just hold on for our targets now. I'm just gonna pull it down just because like I'm already like my daily objective was to simply just get minimum $250. So with this side account, so I'm just gonna. So once it ramps up here at a lower hanging fruit objective, which is this old order flow. Once I take the partials here, I'm paid, and then I can move all stops to break even. And then once I take the partial, it'll be more comfortable to sit here with no risk and then hold the runner, right? So it's a stress-free, risk-free environment. And then I'll pop the executions on here. Okay, so first partial is 85, 15. So 36 and a half handles, right? Very respectable. That's the partial. And then as soon as it ramps up here, stop loss immediately on the runner will go right to break even, okay? 760. Listen, I know the highs are up here. Okay, I see it. The point is just showing you taking partials at reasonable levels, no greed involved, stops going to break even, and then you have a risk-free environment, and you just simply, hold on to the runner. And if it doesn't hit, it doesn't hit. You already paid, so it doesn't make a difference, right? So just remember the 15-minute time frame. The main target, what I was anticipating price to reach for when I was buying here, was the 15-minute imbalance to the left side of the chart, and then the 2 up close candles in the form of an order block. Okay, so I'm partialed out there at 36 handles. Beautiful. Okay, so there's the partial. This here is my low hanging fruit. Okay, and then we're gonna go ahead and we're gonna move stops up relative to break even. Okay, and then with the risk-free environment here. Okay, with stops at break even, we hold the runner, and whatever happens, happens. Okay, we're already paid 36 and a half handles, and then we hold the runner up here. Okay. So forget about the money sign. Okay, look at it and handle. Matter of fact, you know what? Here you go. Oh wait, I don't even think that worked. Oh, here we go. There we go. Okay, there is no money involved. We're up 157 ticks with the runner after we partialed out, alright? So, it looks like just Quintamillions took that with me, so like I said, I would take a partial as well on ES, assuming you did multiple contracts. If not, obviously move your stop loss at least below this down close candle here. You're not gonna find this in many other live streams, guys. I promise you that. Okay, it's not arrogance; it's just the truth. Go. I'll personally Venmo, Cash App, whatever you accept. I'll send someone $100 right now to find me someone from 000 to how many hours they were streaming, and show me someone that really displayed everything that I've showed you guys today. Okay. Now, there's not to say that I'm the only one that can make successful trades on a live stream. That's not, what I'm trying to put on that image of. There's other good ones, but I just don't believe that, you're seeing this level of precision much elsewhere. But anyway, I'll be right back, guys. I'm going to go fill up my water once more, and I'll get back to this. it's amazing. So good. Thank you. I'll be done in about 15 minutes. And then we'll go eat something. Alright guys, it's settled. One successful in the live stream. I'm gonna cop a Rolex right after. Whoa. So with the runner, we partially out at, remember, 36 handles. The runner, we are approximately up about 51 handles right now. Okay, so Brian, listen, I did. Okay, I just didn't tell you guys I was doing that. All right. Eamon, there you go. You're someone that would excel in my group, okay? And I'm saying that because you do not sound like a greedy man, okay? Good job. Yeah, it's very good. You can have a bite if you want. Oh, I was like, what are you taking? You know what? I don't even need the runner that high. I'm just going to put it right up to this rejection block. So, like, originally you'd see the take profit above here, right? And that is because if we take our entire range, okay, you're going to take the high to the low. Here's equilibrium. Where is the most significant high above equilibrium? And have sell stops been taken with this in mind? Yes, sell stops have been taken. Right at equilibrium, right above that, we have this buy side liquidity high here. And this would be a New York session high, okay? So the beautiful thing is I don't even need to be right about this to be profitable. I'm already paid, okay? I've already paid myself 36 handles, okay? And I'm going to hold the runner on for the lowest hanging fruit, which will be what? This rejection block up here. These clean bodies. Or sorry, wrong time frame. These clean bodies right up here. So let me actually get that accurate. There we go. Beautiful. Profit target. Oh, Cutter. Thank you for sharing that because that makes me a happy man. Profit objective week has been reached. So looks like we went down to this tiny fair value gap. Must have been all it needed. So right here. Okay, and really when I'm looking at it, this right here is a balanced price range. Shouldn't really extend too much within this or beyond it if it's going to really continue the buy program, okay? And remember, we have buy side liquidity. So let me not confuse you here. Understand that this here is our daily dealing range. Our short-term dealing range is you find the most significant high that was formed prior to this sell-off that began the buy program here that we engaged with, right? You take the high to the low. And just like I showed you on the daily down range, we look at it on a smaller scale. Okay, high to low. Okay, within this range, up into a premium, we're targeting, so we're buying a discount breaker and we're targeting a premium buy side liquidity pool. So above equilibrium, we have these relative equal highs, okay? And so despite the trading here, okay, obviously it was the only trade we took in the entire live stream, in this entire session. If you got any value out of this, if you learned anything, if I blew your mind, whatever else, go ahead and hit that like button just so I can like know that you guys were enjoying it, whatnot. So it's feedback for the next time I might do this. But yeah. So at this point, if you took the same trade I took on NASDAQ and you took it on ES, once again, so 623. So you're about 13 and a quarter handles profit. So anyone that may have taken that with me, say you took it on ES, that's still a very respectable amount of money that we made here, okay? And then I probably should have labeled this for you guys just so it's, you know, better looking, but there we go. So let's see if it can really just, you know, get the spike up there we want, and that'll obviously be the end of, you know, the trading here. And matter of fact, it is 1:40 p.m. Nice. So didn't really need the macro, but Come on, give me the 56. Give me the 70 handles here. Remember, anyone looking for some extra cash here, whoever can find someone that can do this live consistently, send me the link and I'll send you $100, PayPal, whatever else you want. Just a little bit more effort there. Just patiently waiting. No, you cannot send a link of ICT. But anyway, we're getting ready to take profit here. Quarter tick below it. Okay. There we go. So the runner was held. I think I'm just going to close this up. There's no need for me to stay in here, especially when I profited like very nicely with you guys. The logic was explained in real time. Everything was explained in real time. I filtered out countless low quality setups, dropped countless gems. So if you have the time for it, I would definitely rewatch this. If you want to see more from me in the future, you're gonna have to. I go live on my Discord every single day, Monday through Friday. So that's where you can find me if you want to join in on more live sessions such as this. So I'll put the link down in there if you guys want it. So you can do whatever you want with that. But other than that, I'm gonna head out. I'm gonna go enjoy my day. And yeah, be safe, guys.